Alright guys, we are here today. We got non-farm payrolls, unemployment data. Biggest day of the week today. The markets are mostly dipping down slightly. Q is at 390s, Tesla at 241s. Overall though, the market was pretty green yesterday. Apple had a really good green day. My overall portfolio was nicely green yesterday too. Green again today as well. You know, we added to Disney, our Disney trade. Yesterday or the day before, I think, and we bought like 100 shares, and then it ended up ripping up nicely yesterday for us. So we took some of that profit off. Tesla at 241s, slightly red day, but it had a pretty good day yesterday. I'll put the non-farm payroll timer up. Yeah, so non-farm payrolls expected 190,000. Oh man, let me yawn. Wake up. Yeah, non-farm payrolls expected 180,000. I don't know. I'm showing two different ones. I'm showing 180K, 3.9% for unemployment. We'll go with Market Watch's one, I guess. Oh, gotta wake up a little bit. All right, we're up. .9% for unemployment. I'll put that up on screen so people can see it. We'll put a timer up now as well. Oh man, sorry I keep yawning. There you go, got the timer up. What's up, Daniel? Biggie, Tom. Yeah, what's up, Alberto? Alright. Oh, bro, this is like the 5th time I've yawned this morning. You know I'm tired. Honeywell is going to purchase Carrier Securities unit for about $5 billion, according to Wall Street Journal. All right, we got FOMC, ECB, Bank of England next week. So yeah, it's actually a really, really busy next week. We got CPI. Oh, sorry. Carnival Cruise. Five-day. Yeah, Carnival's been ripping up. I've had a lot of people mention this one to me. I just don't trust cruise ships like that. It's up big though. I mean, that's good. I just don't trust for investing in them. I just don't trust them. I don't trust cruise ships like that. You know. All right, guys. 19. Let's see if we can find some better trades today. We got the E-mini break it down a little bit, but usually I have better results trading the NASDAQ here. Here we go. NASDAQ's been on a big downward trend for a while now. Let's check out TradingView. Alright, so we made a little bit so far. We got out of this, so again, you can see on this account we just grinded up about 90 bucks. Little cushion here. Yeah, what's up, Martin? Quantum Computers. I'll check it out. Thanks, man. What's up, Pew Pew? Anything else moving? I see Apple had a pretty good day. Hit 195 yesterday. We can look at Microsoft too. Here's the Q at 389s. Again, Tesla at 241s. Microsoft dipping a little bit in pre-market, although it had a pretty good day yesterday. Here's Apple on the left side. It's at 194s, so we're keeping an eye on that as well. would help you learn economics, fundamental side of trading. And do you have any recommendations on how to understand both? The easiest way to understand it is pretty simple once you actually learn how to gauge it, right? Like, it's all a balancing act. All of it is, right? Economics is a balancing act. That's what it is. And so if you look at it, it really is a balancing act. What is it balancing? It's balancing inflation expectations and inflation fears. It's balancing recession fears and recession expectations both of these relative to the economy overall, right? And so if and that's what it is. And then when you throw rate hike decisions by the Fed into the book, there, that is another influence on all these different things. And so it's really a balancing act of all these different nuances of economics. And that's what it is. And so basically, the Fed's going to make a decision on what they want to do, on what they're going to do. The Fed is going to make a decision on how they're going to impact the economy every 6 weeks, right? This happens every 6 weeks without fail, like clockwork. Every 6 weeks, the Fed's going to make a decision on how to influence the economy, right? Whether they want a dovish or a less restrictive monetary policy, basically like they want to let the economy grow, or they want a hawkish or more restrictive monetary policy. Basically, they want to let the economy go. They want to push the economy down a little bit in order to combat inflation, right? Some dovish actions are rate cuts, like cutting rates, pausing, dovish action. Hawkish actions are raising rates, pushing down the economy is what raising rates is ultimately doing. And so with that in mind, that happens every 6 weeks, and that has a big impact on the market, on the economy, on everything. But those rate hike decisions, by pushing the economy down, the Fed's way they do it is they raise the federal funds rate, which makes banking more expensive, and then banks raise interest rates to consumers, and eventually consumers stop spending as much, and then businesses lower pricing because of it, and then that combats inflation. But it's about a lagging effect, right? So the Fed's impact on the economy like that, the Fed's pushing down the economy or being less restrictive, whatever their decision is, that has a lagged effect, especially if they're raising rates, that is, right? And so it's not going to impact the market or the economy immediately, and instead it's going to impact it about a year later or more. And so with that said, judging the economy is kind of gauging economic data. All types. GDP data is influential over this stuff because more sales indicates more GDP, and more GDP can be seen as a negative in an inflation-fearing, hawkish Fed market. You know what I mean? And vice versa. Low GDP in a recession-fearing, dovish, market can be a sign of negative stuff as well. Because you don't want a recession, like the market doesn't want a recession. And so it's balancing all these different things with all the economic data that comes out, including like CPI, PPI, Fed rate hike decisions, jobless claims, unemployment, payroll numbers. PCE is what the Fed likes to use for inflation, the personal consumption expenditure. And so there's a lot of ways to understand it, but that's basically what it is. It's just like a balancing act It's a balancing act between recession fears, basically the economy got pushed down too much, and inflation. Basically prices are up too much, and prices go up when the economy is booming, which is, like, if you think about it, should be an obvious thing. And prices go down sometimes when the economy is not booming, which should be an obvious thing. And so those balancing acts mixed with what the Fed does, mixed with the inflation data that comes out, that's the economy. So anyways, that's the easiest way I can explain it quickly, V. Hope that makes sense. Once you grasp that understanding of it, it's pretty easy to understand both how the market's going to respond to economic data. There's a lot of nuance to it, but once you understand that, it makes watching like the Fed announcements and the FOMC decisions a lot easier to understand. Anyways, y'all slap that like button. You're welcome. John's Economics here for free. We're going to go ahead and do a poll. All right, so the poll is, speaking of that, Does the market want higher or lower payroll numbers? Higher, lower. This is what we're going to ask. Does the market want higher or lower payroll numbers? It sounds intimidating for sure, but like once you grasp what I just said, which is the balancing act of once you understand what the Fed is doing, which is pushing down the economy by raising rates. They raise the federal funds rate. It makes banking more expensive, and banking being more expensive trickles into the rest of the economy, right? Like that's what the Fed is doing, is pushing down the economy through their rate hikes, right? It's one of the reasons hawkish. My dad's a falconer, right? Hawks go like this. They dive, right? And so that's the Fed trying to dive down the economy a little bit. That's what they're doing. They're being restrictive in monetary policy. They're raising the federal funds rate. It makes banking more expensive, and then banks impact everything else, right? And so, yeah, banks, you raise the federal funds rate, banks are more expensive, and so banks raise interest rates, and then that trickles into, everything else. Hey, what's up, Water? Yeah, I'm always up this early, brother. Oh, those two things cancel each other out? What two things? What pair do you do, bro? I don't really trade Forex. I trade futures. I usually trade the E-mini, the NASDAQ. Yeah, I usually trade the E-mini, the NASDAQ. I like this new music. It's all right. Which brokers do you use for future trading? I use Quant Tower, but Top Step X, if you can get in with that one, it's pretty dope. Do you think we see the NASDAQ and the US 30 spike today? Maybe. It depends on what payroll numbers show up as. If payroll numbers come out, I'm going to look at what the voting said. The market wants lower payrolls, in my opinion. Again, going back to what I just said about economics, right? Currently, we are in an inflation-fearing market, not necessarily a recession-fearing market. All right, so currently, with that inflation-fearing mindset in consumers, they don't want higher payroll numbers, in my opinion. The market has reacted negatively pretty much universally for higher payroll numbers over the last, I would say 6 months. And maybe it pivots today to something different. But again, I don't think the market wants higher payroll numbers. I think the market is going to react in a bullish way if we come in lower than expected for payroll numbers and higher than expected for unemployment. I think if employment shows up at 4% today and payroll numbers show up at 150K, I think the market's going to rip up. Personally, myself, but it really is arguable. It's certainly not something that is easy to gauge or easy to tell. Again, judging by what I just said when I broke down what economics was about here, it's not always easy to tell what the market wants, right? Like a lot of people think low unemployment is good, high payroll numbers is good, GDP growth is good, right? And conventionally that would be true, but economics are not always going with convention. You know what I mean? Sometimes they do the opposite of convention, i.e. good is bad, bad is good, backwards markets. And that's kind of what we've had for like a year plus now, and really. Looks like you follow fundamental more than technical. Oh, well, I mean, we definitely day trade. Yeah, you're right. But most of the time, at the same time, Sam, you're right. Technically, Quant Tower and Top Step X are software platforms. 100%. I agree. And the same reason that TOS is a software platform, right? TOS is not a brokerage. TD Ameritrade is a brokerage, and TOS is the software platform that they use. And I understand that for sure. Most of the time when people ask me which brokerage I use, they're either talking about Top Step or they're talking about the platform itself, right? And so I usually just answer with the platform, but it varies. It's been a good while since it's been trading as an inflationary market. Yeah. John, how do you think 2024 is going to go? I really don't know, man. I think anything could happen. Well, I don't know, Pawn. Actually, let me read. It's been a good while since it's been in trading as an inflationary market. What do you mean by that? So, we're certainly in an inflationary market. Like, the market's fearing inflation right now, I think. No? I mean, again, I'm trying to think back. Like, usually I cover all the economic reports. Most of the time we're reacting negatively to, like, stuff like that. Although, we did have positive GDP growth that I'm trying to remember how we reacted to it. A couple weeks ago, we did have GDP data come out. I'll try to remember. But regardless of whether we agree or disagree there, it's all good, brother. Yeah, it's been reversed. Higher jobless being good for market compared to that being a bad thing. Right, but I think that's kind of how we've been for the last, like, higher jobless claims means more people filing for unemployment. So, like, still inflation fearing, right? Because, so, we could basically insert unemployment with jobless claims numbers, and higher jobless claims numbers is kind of like higher unemployment, more people filing for unemployment, right? So if the market's reacting favorably to higher unemployment, that means the market's inflation fearing, right? Bank of Japan should be ending negative rates soon. Could be short on bonds, maybe. I know lately, like, and I know this has been like this, like, to be honest, like, it's been like this as far back as I can personally remember. And again, I usually cover all this stuff, like, it's been like this for a long time, you know. Like, it's been like the market has been inflation fearing. The last time we had slight recession fearing dynamics was in March of this year, when the banking crisis happened, right? Like, that made us pivot, I believe, short term to like a recession fearing market because banks were ultimately failing, and the market feared a recession in that way. But I don't think that held very long. I think afterwards, when the banks started to bounce back, and sure, some of the regional banks failed, but when banks started to bounce back, we pivoted back to an inflation fearing market. I don't know. Dow Jones up 500 points after jobs data, just my view. Maybe, man. I hope you're right, bro. I hope the market rips. All right, guys. Hey, jobs data today, team. Are you guys ready? Yeah. Oh, I see what I see what I missed out. So, Pawn, you said, yeah, it's been a good while since it's been trading as an inflationary market, right? I thought you meant it's been a good while since it's been an inflationary market. Like, basically, the market hasn't been inflation fearing in a good bit, right? But I think the way you really meant that was that it's been inflation fearing for a long time, is what you meant by that, which is accurate, which is very true. Okay, gotcha. I think I'm rereading it. Again, it's hard to tell context through text messages. Did you know when I'm in the NASDAQ short? Hey, good luck, bro. All right, team. Again, what do you guys think the market's going to do for payroll numbers listed in chat right now? I see 54% think the market wants lower payroll numbers. And again, I tend to agree with that. All right, again, Tesla at 242s. Watching Apple right now. Here's the SPY. We also got to look at the Q, I think, a little bit more. How's oil doing today? SPY down a little bit. Oil dipped some yesterday, too. Lower, perhaps. Yeah, I think the market wants lower. Not sure I trust the current downtrend on the NASDAQ. Volume of Delta seems too low to sustain. Hey, what's up, V? What's up, Jose? What do you think of Walgreens here? I'm in Walgreens. I'm up on Walgreens, man. Walgreens went from a losing trade a long time ago that I've been holding for a long time to a nicely winning trade. Our average price in Walgreens is $22, and it's up to basically $23. All right, Seam. So we do have Tesla bouncing up. Tesla just broke over 242s. We're still in a pretty sideways range. A lot of people are watching oil. We could also take a look at bonds to see what bonds are doing. You know, the 10-year bonds have dropped pretty noticeably. You know, the 10-year sitting under 4.2% right now. And if you don't know what bonds are, right, just to give you a little bit more economics education here. You'll hear people talk about bonds. You know, in The Big Short, they talk about your grandma buys you $100 worth. You know, when you're 10 and maybe in 10 years you'll make $50. That's actually underestimating the power of bonds. Bonds can be a very powerful hedging device is really what they are. You know, the S&P 500 will give you about 10% a year on average, right? Bonds, again, when you hear me talk about the 10-year rate, right, the 10-year treasury rate, bonds will give you about 4.1% right now. So we'll call it 4%, right? So if you buy a 10-year treasury bond, you're going to make 4% interest every year, and then at the end of that 10-year period, you're going to get your money back, right? So if you put $100K in, you're going to make $4,000 a year for 10 years every year, and then so you're basically going to make $40,000 over a 10-year period, and then at the end of that 10-year period, you're going to get your 100K back. And so in 10 years, you're going to make about 40% returns on your 100K if you buy treasury bonds, right? And again, I don't think these should be like, they're super safe because they're guaranteed, right? They're guaranteed by the U.S. government, but again, the S&P 500 will give you about 10%, right? So it's going to give you over 2x what bonds give you. It's not guaranteed. You could always get stuck in crashes, but long term, it's pretty safe too. The other thing to understand is that they typically move the opposite of each other. You know what I mean? So like bonds are going to go up, markets are going to go down. If you look at like the SPY, you know, SPY had a big green day, bonds had a red day yesterday, and this is normal because they're competitive with each other. So the more people that are buying the S&P probably means less people are buying bonds and vice versa, right? So in that regard, they're inversely correlated. Boeing executives and China's aviation regulators discussed business developments overseas and agreed to strengthen exchanges and cooperation. That news just dropped this morning. Did we have earnings yesterday that I missed? If we did, I missed them. Do we reckon non-farm payrolls will go up or down? I'm not sure. So we had prelim non-farm data earlier in the week, although it's not the best. It's not the most indicative. Yeah, so again, we had when we had non-farm payrolls drop earlier this week, right? We said we had again, we had ADP non-farm employment change data. Those numbers came in way lower than expected. They came at 103,000, which did make the market move up versus 130,000 roughly expected. So way lower than expected prelim non-farm data. And you might hear this and say, hey, well, prelim data came in low. Maybe actual payroll numbers are going to come in low. It makes sense, but it's flawed thinking. Very rarely do these actually match up. If anything, I'm kind of inclined to do the opposite, because a lot of the time prelim numbers will come in low and payroll numbers will come in high, or vice versa. Prelim numbers will come in high and payroll numbers will come in low. I haven't seen them be the same in like months, you know. And again, I'm not saying they're not gonna. Again, the funny thing about economic reports is that nobody freaking knows what's gonna happen here. Nobody does. And so again, I wouldn't take a trade like that. Unemployment expected at 3.9% today, guys. 3.9%. And again, we'll see if we get something good. I hope we do. But again, the question is, what is good? I think higher is probably gonna be seen as good. All right, team. But as you know, I do swing trading and dividend harvesting. If the number is higher, are we saying that the Fed is likely to cut interest rates? Not anytime soon. You know, again, higher unemployment and low payroll numbers going to signal less inflation problems, right? And that's probably going to make the market go up, not down. But again, it really is arguable. We don't really know. I can look at the poll numbers, and we got hundreds of votes at this point in time. There's pretty split down the middle. 51% thinks the market wants higher payroll numbers. 48% think lower. I'm on the lower thing. I think the market wants lower payroll numbers, although I'm really not 100% sure what the market wants or is going to get here. Why many people say that December is not a good month to trade? Who says that? I mean, it depends on what's your definition of it. Typically, we get what's called a Santa rally. Not always, but typically we get like a Santa rally that like markets rip up big. You know what I mean? Like that's usually what we get, but it varies for sure. In terms of dollar index, do you think that if we have lower non-farm numbers, the dollar index will be bearish? Yes. I believe so, but I'm not 100% sure, but I believe so. All right, so SPY actually starting to bounce up a little bit, although the market's pretty flat in anticipation of these numbers. My guess is that the market is just apprehensive, awaiting these numbers. So again, we'll see. But yeah, so again, Tesla at 242s. Let's see if we reject the previous closing price. The problem with Tesla is like we're right around the 200 EMA, the volume weighted average price, the previous closing price. I think we're going to get a rejection, and we're actually starting to get one now. Maybe not though, but these are pretty big influential levels. You can also see the same thing on the SPY right there, the 200 EMA VWAP, previous closing price. They're all right around the same spot. I'm not sure what the probability of non-farm payrolls being lower. I really don't know. What the actual numbers are going to show up as, I really am not sure. All right, so yeah, there's the rejection. And again, this is why, like, look, I'm going to tell you one of my favorite trading strategies that's very simple, very easy to do. Okay, I'm going to tell you one of my trading strategies, very simple, very easy to do. Okay, I'm going to preface it. I can't guarantee you're going to make money. Nobody can, not an investment professional. No idea what I'm talking about. All right, but we take a look at Tesla here. Tesla's a good example. Okay, so I have 3 milestone levels that I look at in terms of indicators. I've got the previous closing price right here. I've got the volume weighted average price, this purple line, and I've got the 200 EMA. Whenever these are in close proximity to each other and we're maintaining a specific range over or under them, either we pull back to them, high probability of a bounce, or we pull back to it like this and we get within a certain range, high probability of a dip in that situation. That's the easiest way that's one of the easiest strategies you can take. You wait for all 3 of these levels, which have different groups of traders watching them, to coincide with right around the same spot, and you take the appropriate trade based off of that. You wait for a pullback to it, and you basically bet on these levels rejecting or holding, depending on if you're long or short. It makes a lot of sense, guys, so I hope that works for you. Sorry, I might try to clip that little breakdown in strategy and make a video, so bear with me, team. Pun intended. All right, guys, so we did reject exactly off of that. If you guys heard me, I called it, too. I said, hey, I think we're going to reject right here on Tesla. We pulled exactly down there, exactly what I thought would happen. All right, there we go. Made a clip based off of that. It really is one of my favorite strategies. You'll hear me talk about this a lot. It's a short-term day trading strategy, though, so like... All right, guys. Hey, we still got an hour until this data comes out. An hour. What's going on at AMC? Is it halted? It's not halted. It just has no volume, I think, right? Yeah, it's not halted. I just think it has no volume. Yeah, it's not halted. AMC's open. It's just barcoding. It's at a pre-split price of 68 cents a share. All right, guys, you guys ready? All right, guys. Again, slap that like button. How many likes we have, team? We can do better than this. All right, we got 94 likes. Listen, I'm not going to pressure you to hit that 6 likes on this thing, but do it now or I'll hate you forever. Subscribe. Hit the like button. Forceful with it today. Looking at the daily. Yeah, I'm in Coca-Cola right now. I'm up on it. My average price in Coca-Cola is about 52 cents. Oh, man, Honeywell dipping down a little bit. Why is Honeywell gapping down so much, man? Something bad happened with them? Honeywell is going to buy a secure unit of Carrier for $5 billion. Yeah, so they know that. Basically, the reason these dips on these acquisitions, like you might think these acquisitions are strong, right? But the reason companies dip on them is because typically when a company pays this much, they know it's going to affect their bottom line short term, right? So like the following earnings reports might be a little less impressive because of the money that they're spending on this acquisition, even though the long-term net thing is going to be a positive most likely, right? That's why the company's doing it. But that's one of the reasons you'll see companies, even though they have good acquisitions happen, sometimes like the stock will short-term react negatively because of that, is because of the implications on short-term, views on earnings, basically, is what it is. My wrist's feeling much better. I went to jiu-jitsu yesterday. Hit my first Kimura. Actually, I think it was Americana. I held his wrist down this way. I'm pretty sure it was Americana. So I held his wrist down this way, slapped it on here, and then pulled up. I'm pretty sure it was Americana that I hit him with. It still hurts, though. That actually just hurt. But basically, it hurts, but I could still power through it and do jiu-jitsu. What's up, Beach Mom? All right, 56% think the market wants higher payroll numbers. Again, I disagree. Guys, I disagree, but that's all right. All right, guys. We also have unemployment today. All right, unemployment expected at 3.9%. We got a SPY, Q. All right, so we're going to put this up. Payroll numbers drop soon. Does the market want higher or lower? You can vote on that poll on Twitter as well. As I'm sure you're aware, it'll take longer to recover if you keep doing jiu-jitsu with a sprained wrist. I don't know if it's sprained. Like, I'm okay. I can still use it pretty easily. What I actually think it is, I think it might be carpal tunnel. You know? But today I'm going to go get a wrist guard. GameStop is trending. Where's GameStop at, man? GameStop ripped up yesterday. I'm nicely green on it too, which is cool. Why is the market not making new highs? I'm not sure. I mean, why does the market do anything? You know? Because the market's not in a constant state of breaking highs. All right, so Kathy Wood said, quote, the SEC is engaging with us on the Bitcoin ETF application. It shows a change in the SEC's behavior. Bitcoin ETFs will come for sure. Multiple ETFs will get approved at the same time, and the court is going to mandate the SEC, according to her. Again, Bitcoin back up to over 44,000 right now, over 44K. What happens if non-farm's less than 180K? I think the market's going to go up. Where did the bulls go on vacation? I mean, yeah, bro. I mean, look, here's a daily chart for the last year. Yeah, man, bulls are MIA. Am I right? You know, I mean, what a bearish market this last year has been. You know, SPY only up what 18%. What a bearish year. Again, SPY actually very green relative to yesterday too. I thought I would trade today, but I don't have the money to fund my account. Well, try a funded account program, bro. Are you going back Disney anytime soon? What do you mean? Am I buying Disney stock or am I going to Disney World? All right, guys. Hey, we still got about an hour left. All right, guys, you ready for payroll numbers here, team? Why do people think the market goes up? Yeah, everybody acts like the market's just going to go straight up, as well as is in some constant state of about to crash every other day, you know, because the news said so. You know what I mean? Again, Tesla at 241.40s. Again, Apple at 193.90s. I mean, we don't know. I think, again, personally, I think higher payroll numbers is going to make the market go down and vice versa. Lower payroll numbers are going to make the market go up. But that's my own personal opinion. I really have no idea what it's actually going to do. That's just my best guess. Nobody really knows, though. Yes, remember, jobs report today, 8:30, team, 8:30. Bro, I can't imagine anything quite as cringy as somebody I can't imagine something quite as cringy as somebody bragging about obsessing over a penny stock guru teaching nonsense. It's total nonsense. It's kind of like me saying, "Hey guys, I'm learning alchemy." You know? And I put up a bunch of books about alchemy and say, "Hey, look at me, guys. Look how smart I am." Like, I think a lot of people get into trading because they want to look smart. Ironically enough, sometimes it makes it look the opposite. Like, look, I'm not saying you can't make money day trading, but penny stocks is not where you want to go. It's just not. Yeah, like I see videos of people on the internet and they're like, "I spend all my time studying," you know? And they've got like, never mind, I'm not going to say who. But they got a picture of him like, "Trust me, bro. Look at these amazing." Like, bro, it's just marketing, man. Like, at a certain point you zoom out, it's just freaking marketing. Of course, they don't like me because I'm telling people the truth, but like, it's just marketing, man. Higher payroll numbers means lower inflation. Wrong. Wrong. That's the opposite. Higher payroll numbers means worse inflation problems. It means more spending. More spending means worse inflation problems, not lower inflation. Higher payrolls means more spending and higher inflation. Lower payroll means less spending and lower inflation. Unemployment rate's the opposite. Higher unemployment means less spending, right? And so if we're in an inflation-fearing market, the market's going to want lower payroll numbers and higher unemployment. And again, that's the opposite of convention. You know, typically higher payroll numbers means economic growth. Lower unemployment means economic growth, but the market doesn't want that. And in fact, Jerome Powell has consistently said over the last 6 months plus that the biggest obstacle to us hitting our 2% inflation goal over time is the labor market's resiliency, right? So the labor market is too resilient right now. The market does not want higher payroll numbers, in my opinion, although it could vary. But again, what I will say is that if the market reacts positively to the payroll numbers going up, that means the market's more so pivoting to fearing inflation, or pivoting to fearing a recession more than inflation. Because if the market's still inflation fearing, it does not want high payroll numbers, which is what it's been over the last couple weeks. This looks outdated. We are not. I mean, brain, never mind. You tend to disagree with a lot, but the market certainly reacts negatively to payroll numbers coming in higher than expected lately. Again, we can look at everything, right, and look at the initial reaction to everything. The good example was earlier this week, JOLTS. Let me see. The easiest way to test this, right, like it really is the easiest way, is to go back in time. All right, so here's the cue, right? Here's the cue. We can go back to December 5th, which is when the JOLTS report came out, and we can look at 10 a.m. when JOLTS report, so job openings, came in much lower than expected, right? You want a gauge of this. Job openings came in much lower than expected here. What happened in the market afterwards? It ripped up. So again, it's similar to today. Jobs came in low on Tuesday. What did the market do? The market went up. What does that signal? An inflation-fearing market. And again, you have to understand the economics behind it. Jerome Powell has consistently said the labor market is the biggest obstacle to us hitting our 2% inflation goal over time. If the labor market's the biggest obstacle, what the Fed wants to do is push down the labor market. They don't want to have to raise rates to do it. And so they're hoping that what we already have means the labor market's going to go down. But in my opinion, the market certainly is still fearing. In my opinion, the market's certainly still fearing inflation. You know, inflation has gotten better, but we certainly haven't pivoted to an inflation-fearing market in any way. Again, Wednesday, 8:15, guys. Wednesday at 8:15, all right? Wednesday at 8:15, ADP prelim payroll data came in much lower than expected. What did the market do? The market ripped up. The lower than expected payroll numbers came in here. Why did the market react positively to lower payroll numbers? Again, second day in a row this happened, right? And so we can say the market's not fearing inflation, but the reactions to your economic data shows the opposite. You know, and again, not really arguable. I can't say what the market's going to be doing moving forward. What I'm saying is that this week, the market has certainly feared inflation in terms of the economic reports. Again, we can look at when the economic report came out here. Lower than expected payroll numbers bounce in markets. We can look at the same thing the day before, exactly when the data came out. The JOLTS report came in here, signaled lower than expected numbers for JOLTS. Again, 8.7 versus 9.4. Less than expected jobs. Again, market ripped up as soon as that came out. All right. And again, these all signal inflation-fearing markets. And really, this has been what it's been for a while. Like, the market has acted this way for extended periods of time. So again, we never know what the market's going to continue to do, but like that's what the market's been doing so far. I bought yesterday with unsettled, got settled. All right, so Jose, I appreciate the donation, brother. He says, hi, I bought yesterday with unsettled on Fidelity with unsettled funds. Today I got settlement from other stocks I sold Tuesday. Can I sell this stock I bought yesterday with unsettled since I have settled now, or do I have to wait? Firstly, Jose, I genuinely appreciate your donation, brother. Truly appreciate the donation, man. Genuinely appreciate the donation. Sorry, I dropped my headphone. With that said, though, I'm not sure, bro. Brokers are different. Each broker can behave differently in terms of good faith violations, which is what you're referring to as good faith violations. If you trade with unsettled money, it's called a good faith violation. Most of the platforms that I use don't even let you do good faith violations. Like, they're not going to let you trade with unsettled funds. They're going to make you wait until your funds are settled before you can trade. And so the answer here, Jose, and again, I genuinely appreciate the donation, but I can't give you like a for sure answer. The easiest way to put it, you got to ask your broker because each broker is different. I know you said Fidelity, but I've never really used Fidelity, so I'm not sure what their good faith violation rules are. And so I would reach out to them, brother, and ask them. I genuinely don't know. I wish you the best of luck, though, and I appreciate the donation, man. All right, team. All right, we got about 600 people here left. We still got 40 minutes here. 40 minutes, guys. Okay, so Daniel says, should I follow your trades? No. You're not going to be able to follow my trades. I don't want anybody to copy me. I have no idea what I'm talking about. I might be wildly wrong about everything. Don't copy me. Top 3 most wrong traders ever. Yeah, I've just never used Fidelity. Chat looks like it's helping her. What is Signal? I'm not sure. We'll do whatever you guys want to do. I'm not giving out signals. All right, so far, most of the public thinks higher for payroll numbers, which is very odd. I tend to be contrarian here and disagree. I think higher payroll numbers is going to make the market dump, personally. Yeah, I think if we come in higher than expected, the market's going to fall, personally, but we'll see. Bro, all I'm saying is Twitter ads are on point today, bro. They are showing me this really freaking cool slingshot that's like steel. It's like a steel slingshot. They're showing people like shooting down like branches on trees with this slingshot, man. All I'm saying is target found. Like, listen, I might buy this thing right now. Apple's starting to rip back up. It's at 194. Finally, a good ad placement here, you know. Again, SPY dipping a little bit, but we can take a look at Apple. Again, Apple's trying. Apple at 194s right now, starting to creep up a little bit. Mostly things are slightly red today, but mostly flat. Oh, can y'all not hear the music? My bad, dude. I did a post earlier. Now I'm realizing. Nah, if it's higher, it'll pump. I mean, again, that's fine. I disagree. I bought Disney a couple days ago, and then I took profit on Disney yesterday. So that was what we've done in Disney. Oil, we're up a little bit on this yesterday. We bought oil too. Walgreens, we actually went from red to green on it too. We were down on Walgreens, now we're green. Square, man, who knew we'd be up so much on Square? PayPal too. You'll love to see it. Yeah, again, I've been in Walgreens for a minute. I bought Walgreens. I'm looking at my trades now. I bought Walgreens in September. So I've been holding this since September. Finally green on them. I was red for a long time. My average price is 22. Roughly 22. We're at almost 23 now, so I'm finally green. How you doing on Chewy? I'm green on Chewy, actually. I actually took profit. I didn't realize how much I was green, but I took some profit off of Chewy yesterday because I ended up buying this dip. My average price is 16.90s. This is a beautiful example of how I take these dip buys. When I think something's down too much, and I think it's going to be okay long term, like Chewy, people are going to continue to buy pet food online, right? That's good for Chewy. I think the future is not brick and mortar in a lot of different industries, including pet food. I think some people are still going to take their pets to the shop, and that's going to make brick and mortar pet stores a little bit more resilient than like other stuff. But I still think like bulk pet food orders are going to come through online on places like Chewy, right? And so I ended up buying Chewy. My average price is 16.90s. So my average price is actually right here, lower than this, actually right around here, 16.90. So we got in Chewy about right here at 16.90s. We'll call it this, and we got in basically right around the lows. Basically right around the lows. We've already taken some off yesterday though. But yeah, we'll take it. Not a huge trade, but a good example of kind of the way I do this. Very simple. Yeah, we bought it. I'm looking up where I actually bought this. So we bought this right here. That's where we got in. It's a small trade though, so like, and again, we're still holding some of it. We took some off yesterday. But we bought more than 20 shares. Let me see how much we bought. We got a couple. Look, I'll show you guys the trades just for the... It's not a huge trade, but again, I'm not lying. We got in literally right here. I think we got into 40 trades, 40 shares. And then we got out a part of it right there. It's pretty good entry and exit momentum, if I do say so myself. But yeah, I'll take it. GameStop's been ripping up too. All right, guys, we got 30 minutes here, 30 minutes. Good morning, John. And all few sectors are firing. Other sectors like services, health are hiring, and there aren't enough people to work, so maybe it's as expected. Maybe. I'm not sure, Robbie. I don't know. You have to look it up, Daniel, regarding divvies. Walgreens, if I look up their divvy date, payment date is on the 12th. The record date is on the 14th of November. So, which I should get it, I'm pretty sure. I probably should have held Walgreens, honestly, but I'll leave it. Yeah, I've been holding Walgreens since September, so I'll definitely get this dividend on the 12th. All right, guys, we got like 630 people here live. Again, slap that subscribe button, hit the like button, team. We appreciate it. Gonna continue the growth up here. Man, I'm excited for the crypto market, man. I really am. We're probably gonna be doing a crypto stream on beginner crypto today. Crypto market's looking hyped. Yeah, I've been owning that stock since September though, Cal, so got in GameStop 100 shares, 1370, sold 80 a little before midnight. Hey, good trade. Bitcoin 50K by the end of the year. I think so. I think Bitcoin could hit 50K, especially if it depends on whether the ETF's going to get approved or not. Hey guys, remember that trade I talked about earlier regarding the previous closing price, the VWAP and the 200 EMA? Again, same concept with Apple here. Now the volume's a little light, but again, same concept here. We pull back to this level. The previous closing price is way up here, but you can do it with just the VWAP and the 200 EMA very simply as well. Same exact concept right here, guys. Same exact thing. Bounce up, rejection right off of that level. Very good milestone level. So basically what I'm doing is I'm using the power of the volume weighted average price, but I'm also adding into the mix the 200 EMA, right? And when I do that, it's just really effective. Put this month on your watch list. Anytime I hear marketing like that, I'm super skeptical of it. I'll take a look at it, but it's a penny stock that's $6, $5 a share. Terrible long-term chart as well. You know, it's always the crappy companies that people are all so hyped up about. Again, if we look at Blue here, it's always these companies that people get hyped up about, man. Like, look, every time I hear some big sensationalized marketing and I throw up a long-term chart, like, bro, this thing was at $230 in 2018. It's now at $4.80 a share, brother. You know, very rarely will a company do this, be so successful, drop all the way down to to single digits, and then come back. You know how rare that is for a company to go from 230s, and I'm not sure if it got split or what, if this is a post-split price or whatever, but you know how rare it is for a company to do this? To come all the way back down from triple digits to single digits and then actually survive long term. It's incredibly unlikely. Most of the time, these are going to get delisted, go to pink sheets, go bankrupt, and you'll never see the stock again. And anybody that investing in it is going to lose everything they put into it. That's typically... Oh, we get more than one suggestion for penny stocks every day. Usually I just shoot them down because these are terrible companies. Yeah, I see the stock. I don't like it. I'm not hating though, brother. It's all good, dude. Like, we can agree to disagree. Hope you understand. I'm just trying to protect people. And most of the time and again, I'm trying to teach everybody here. If you hear somebody telling you anything's a sure thing, that anything's going to skyrocket and go crazy and you're going to miss out in like high pressure sales and marketing, it's usually a really sketchy penny stock that is almost certainly going to fail. All right. So you gotta be resilient to that type of thing, team. And sorry, man, we just get a new one every day. I'm usually saying the same thing. Right, but the target market doesn't mean anything, man. Like, I could say, you know, here, look, I'll do it right now. Watch. So, hold on. I could say, hey, man, I'm getting into the casino industry, you know, tomorrow. And that casino industry has got a market size of 230 billion, guys. You know, does that mean that my casino thing is going to be successful? Of course not. You know what I mean? Like, that's not a big sell. You know, again, it words it in a really hyped up way, but the size of the industry doesn't mean anything if the company's small like this. It just doesn't. If the company's not making the sales they need. What's the symbol? Hey, well, good luck, brother. I hope you make some money with it. I really do. I'm not trying to be a hater. I'm really not. And again, I hope if you're buying this thing, I hope it goes up, man. I really do. I'm not hating on it. I'm just incredibly skeptical of penny stocks, bro. Especially penny stocks that were once big companies and have since dropped down to single digits. Super skeptical. As you should be as well. But again, I hope you make money on it, brother. It's all good, dude. What are your thoughts on the NASDAQ 100? I trade it every day. All right, guys, we got about 23 minutes. Got about 700 people here live. Yeah, but factoring inflation in, somebody said 4% interest on bonds is useless if inflation is factored in. But yeah, but you're missing the point of them. Okay, the point of them is to keep up with inflation, right? Or to a certain extent. A lot of the time it's not going to purely keep up with it, but you're missing the point of what investing is, right? Again, everybody at home. Again, I'm going to be a broken record with this. Everybody at home. Hey, shout out to Ramsey. Thanks so much for the $4, brother. Thanks so much, man. I appreciate it. But listen, I'm going to shout this in the back. Everybody at home. Understand, investing in anything is the sole purpose of that is to hedge against inflation long term. Long term investing, the sole reason of it is to hedge against inflation, is to keep up with inflation. Okay, because if you don't and you sit on cash, you are going to lose money over time. That is a certainty that you are going to lose money over time if you sit on cash, right? In terms of inflation. And this is every type of investment vehicle you could think of. This is the S&P 500. The NASDAQ, the Dow, gold, real estate, bonds. These are all inflation hedges. What you use them for is to keep up with inflation. You know, if you're a little bit more risky, you can buy the S&P 500. If you're less risky and want a sure thing, you could buy bonds. Bonds will keep up with inflation less, but it's going to do better than sitting on cash. At least you're going to earn 4% a year off of it in bonds, right? But again, the job is to keep up with inflation. And so comparing them to inflation, I understand. But again, you kind of miss the point of it if you do. I mean, this is your argument. I mean, name fits, degenerate gambler guy. Here's DRRX, 64-cent stock. Here's a long-term chart. Horrible. It was at $70 back in '08. It is now at 65 cents. And so this one's even worse than the last one, mostly because this is like a long-term terrible trend. This company has failed basically for 10 years now. If your long-term trend looks like this, it might be time to give it up. But I don't necessarily think buying this is a good move. The only way, like, okay, listen, let me give some context to this. There might be swing trade type of things or a little bit longer term trades that you can take, but it has to be with money you're okay with losing. Again, if you're taking a position in which you're saying, hey, this thing pops up once a year or so like this, let me buy it at the bottom and hope it pops up again, I understand that trading strategy. I'm not against it necessarily either. I mean, I think you'll probably lose money, but like, do whatever you want to do. I'm not against that type of trading strategy. What I'm against is telling people that this company itself is some highlight diamond in the rough company that nobody knows about when it's got a long-term chart like that looks like this and it's at 65 cents a share. That's my issue, right? But as long as you're reasonable and you say, hey, I think this thing might bounce, do your thing, man. I'm not mad at that. Just understand what it is that you're doing. I think that'll be positive for stocks, actually, FA. I think he said if non-farm payrolls is less than expected and the unemployment rate rises, this will be bad for stocks. I think, again, I think it's actually going to be a positive thing for stocks. I think it's going to be a positive, optimistic thing for stocks. You all right? You want to come on stream? No? All right, guys. So yeah, sorry, my wife's here talking to me. The November jobs report is set for release Friday morning and is expected to show a re-acceleration in job growth after worker strikes impacted the October report. Yeah, but they're talking about what's expected, Janelle. Right, so they're just talking about what's expected here. So what's expected is 180,000 jobs showing up today. 180 to 190 is what different analysts and banks are expecting, right? That's what they mean is it's expected to show a reacceleration, i.e. 190 to 150. But what we're talking about is what happens versus these expectations, like relative to these expectations, what actually happens, right? And if we come in lower than expected for payrolls, I think that's going to be an optimistic sign. You know, the market doesn't necessarily want a super strong labor market. Fed Jerome Powell has said that numerous times, that the market just does not want a super strong labor market, and so more payroll numbers is going to signal a strong labor market. And I don't think the Fed wants that. I think unemployment is a little bit more nuanced than just good or bad. I think lower unemployment still could be seen as a positive sign because, you know, payroll numbers, because I just think unemployment can be a little bit more nuanced. And so I think if unemployment comes in low and payroll numbers come in low, I still think the market will probably bounce. But it's certainly more nuanced. And again, let me know what you guys think about this in chat. Are you licensed by FINRA? No. I'm not an investment professional. I'm not liable if you lose. Always make your own assessment, trade responsibly. I have no idea what I'm talking about. I also don't give predictions either. And so, nope, I'm not. But I don't need to be because I'm not actually telling anybody to do anything. All right. Euro, US dollar. Not sure what it's going to do. Nobody does. We'll have to wait and see. The shorts are probably in our bathroom, and they might be in the laundry room. Smell the shirt, see if it's dirty. I can't remember if it is or not. It is? Yeah, you can. It's fine. I'll hand wash the shorts. It's fine. All right, thank you. No shorts here. Yeah, I don't have a crystal ball. Alright guys, we got about 800 people here live. I'm also going to slap this thing in sub-only mode. If you haven't already, subscribe. You know you want to. I appreciate it. Please expect the effect of non-farm payrolls on the dollar. Higher than expected non-farm payrolls will probably make the dollar go up, I'm assuming. And vice versa. And I think it's higher payroll numbers will probably make the dollar increase as well as the S&P 500 decrease. Again, though, I'm really not sure. Sorry, I got 2 penny stocks up on chart. Let me change this. There's the SPY. Here's the Q on the right side. We could also look at the dollar index here on the right side, which, again, typically the Dixie moves inversely to the market. So if the market moves up, the dollar index goes down. There's a lot of nuance and reasoning behind that, mostly because if people are sitting on cash, if cash is gaining value, people are less likely to spend their cash on other things. If cash is losing value, they're more likely to take that cash and invest it somewhere else, right? And so because of that, these have an inverse correlation. The other thing to understand about the economy in general, right? We had a big question earlier about economics and what it all means. Again, the biggest way to put this is that it's a balancing act. Everything's a balancing act in economics. You have to understand that every 6 weeks, the Fed makes a decision on how they want to influence the economy. You know, if they want to whether they want to push down the economy or whether they have a less restrictive stance. If they want to push down the economy, i.e. through rate hikes, then that's called hawkish. You know, they want to push down the economy to help inflation. Typically, they take that stance when inflation is out of control, right? They want to push down the economy if inflation is bad. Basically, they want to discourage spending through rate hikes. If inflation is not so bad, they are more dovish, is what it's called, meaning they take a less restrictive economic stance, and in turn, they don't want to push down the economy, and the market's going to react in a positive way to economic growth, which is more true to convention, if that makes sense, right? But the point is, it's a balancing act. If the market is fearing inflation, higher GDP growth, higher payroll numbers, you know, to a certain extent, higher jobless claims numbers are going to affect the market in a positive way because the market fears inflation. So spending is bad, GDP growth is bad, payroll numbers are bad, you know, low unemployment can be seen as bad in some cases, right? And so that's if the market's in an inflation fearing market. And again, if we are, typically the Fed, you know, we've been in an inflation fearing market for like a year plus now, and over that time the Fed has aggressively raised rates to discourage that spending. And you know what I mean? So that's kind of the nuance of economics here and how it impacts everything. And again, lately we have been in an inflation fearing market. The last time we feared a recession significantly was in March when the banking crisis happened, when a bunch of regional banks started to fail. At this point in time, though, we are not in a recession-fearing market, in my opinion. GDP growth is very strong, and you know the market's just not fearing a recession like that anymore, even though the Fed has pivoted. But what the Fed says, again, what the Fed has consistently said, is that the labor market is too strong, it's too resilient. And so in that regard, they want the labor market to cool, which means lower payroll numbers. And so in that regard, I think the market's going to react positively to lower payroll numbers if we have lower payroll numbers. And if we have higher payroll numbers, I think it's going to be a negative market reaction. Although, again, preface the report, I have no idea what's going to happen. I truly have no idea. But that's just so you can understand the economics of it. Again, dovish means less restrictive monetary policy, i.e. rate cuts, pauses. Hawkish means more restrictive monetary policy. Basically, the Fed wants to push down the economy and spending. And so that means more rate hikes, you know, more inflation fearing. And again, this happens every 6 weeks where the Fed makes that decision on how they want to influence the economy. But the other thing to understand is that, again, it has about a year lag. So the Fed raises the federal funds rate to banks. Banks are the ones impacted by that the most. When the federal funds rate goes up, banks profit less. And so what do is they raise interest rates to consumers to compensate for it. Eventually, over time, and again, this is why there's a lagging effect, eventually by raising interest rates to consumers, eventually consumers stop spending as much, businesses lower pricing to compensate for it, and thus it combats inflation. But there's a lagging effect, right? And so right now, and into 2024, we've had a lot of people that have asked essentially what they think is going to happen in 2024. And really, as I always say, I have no idea what's going to happen in 2024. What I will say is that the Fed has aggressively raised rates over the last year and a half. They've been very aggressive with their rate hikes. If we look at a graph on these rate hikes, let me see if I can find a good one. If we look at a graph on these rate hikes, let me see if I can find a good one. If we look at a graph on these rate hikes, let me see if I can find a good one. If we look at a graph on these rate hikes, let me see if I can find a good one. If we look at a graph on these rate hikes, let me see if I can find a good one. If we look at a graph on these rate hikes, let me see if I can find a good one. If we look at a graph on these rate hikes, let me see if I can find a good one. If we look at a graph on these rate hikes, let me see if I can find a good one. If we look at a graph on these rate hikes, let me see if I can find a good one. If we look at a graph on these rate hikes, let me see if I can find a good one. If we look at a graph on these rate hikes, let me see if I can find a good one. If we look at a graph on these rate hikes, let me see if I can find a good one. If we look at a graph on these rate hikes if we look at a graph from these rate hikes, the Fed has very aggressively raised rates over the last year. Okay, you can kind of see starting here, these are all rate hikes. We've paused essentially since August or so. We've had a pause. We haven't raised rates since August. But again, there's a lagging effect, right? So if we can look all the way back to October, November of last year, this is what has happened over the last, year or so. And so we have yet to feel the effects of these rate hikes, especially these on the back end of this. And so again, the question is, how is that going to impact the economy? Again, it's going to make banking more expensive. I would watch banks closely, because if banks start to struggle, the market might struggle afterwards. That's the way to understand this, guys. So I hope all of that makes sense. That's the nuance of economics here with these rate hike decisions, because a lot of people don't seem to understand it. What's up, comma? My neighbor wants to take out little investment group to the next level, and they're pushing me to get licensed. As I explained, I cannot run an investment group without it. Your thoughts, not advice. Personally, I'm not getting licensed because I actually have more restrictions in like live streaming and stuff like that if I am licensed, right? I think I do. I might not, but it's going to be harder for me to live stream my trades if I'm licensed, in my opinion. And again, so I'd rather just tell people not to copy me, tell people I'm not an investment professional consistently, and not get licensed, But that's just me. It's subjective. What the best move there is subjective. Depends on the person, really. I read some reports on EVs yesterday about fast depreciation, high cost of accidents, repairs, high cost for battery replacement. In my opinion, Tesla will be heavily sorted into the near future. Yeah, I don't want to get my own fund. All right, guys, we got over 1,000 people here live. We appreciate y'all joining the stream. Again, hit that sub button, hit that notification bell. We still got about 9 minutes left until payroll numbers come out. 9 minutes left, team. Yeah, I mean, again, maybe we cut rates. I don't think it's going to be until next year for sure. We're certainly not going to cut rates this next meeting. A lot of people claim to. You really start to understand how little people know about markets when everybody's betting on something that's super outside the realm of possibility. Not outside the realm of possibility. Super outside the realm of likelihood, I guess we'll say. You know what I mean? We got some people that every single Fed decisions, for whatever reason, they're betting on this type of percentage. And it's just super unlikely, guys. Super unlikely. Maybe we do, but just not very likely. Dixie moving up. Again, the SPY's still down some here. Yeah, I mean, EV is certainly the future. Again, whether you think it is arguable, but again, the easiest way to boil it down. Okay, so the easiest way to boil it down, and again, I'm going to preface this with look, we can agree to disagree in some ways, but EV is certainly the future of automotives and motors in general, right? Like, how do we know this? There's a lot of signs that this is. Number one, look at efficiency. I'm not talking about mining. The only argument against EVs mostly is that lithium mining is environmentally taxing. But if you think objectively about it, and again, you have to think objectively, you have to understand efficiency is what drives technology growth. Okay, and EVs are simply more efficient. They're simply more efficient. You get better mileage. They're faster. They're quieter. They mesh better with technology, right? So EVs are simply more efficient. These are not really arguable things. You know what I mean? A Tesla Cybertruck can beat a Hellcat. All right, a Cybertruck can beat a Hellcat. All right, they're simply more efficient vehicles. They just are. They mesh better with technology. The other argument is, oh, well, charging stations and lines and charging stations. Listen. Anytime you have a new technology, there's always speed bumps. And so, of course, you're going to have, it's not going to be perfect infrastructure because they're building the infrastructure now. Like, it takes time to build these things, and you're going to have speed bumps, right? But when you zoom out and you look at efficiency, here's an easier way to put it. Okay, when I was growing up in the 90s, we had GoPads. GoPads were like a cool thing. If you don't know what a GoPad is, it's basically a gas-powered scooter, right? That went like 20 or 30 miles per hour. I loved GoPads and all that stuff. You know why you don't see very many actual gas-powered scooters? is because EVs are more efficient now. And so what you actually see is you see electric scooters now that go just as fast as GoPeds ever went. They get better mileage. They're easier to run. You know, you see drones that are flown by lithium batteries and electronics as well. And so it simply is the future. You can look at it, and again, big oil, of course, doesn't want this, right? Like, big oil understands EVs is the EV, you know, is their biggest threat. The biggest threat to oil is EVs, right? And again, what's big oil going to do? Big oil is going to put out a lot of marketing, a lot of arguments, a lot of, lack of a better word, propaganda, talking about how bad EV is and about how you shouldn't like it. And a lot of people are towing that talking point now. But again, when you zoom out and you look at it objectively, in my opinion, EVs are the future. Dixie up. Oh, well, of course I'm biased. 100%. Like, being at the start of a new technology and when infrastructure is not built yet, you're going to have speed bumps, 100%. And that's understandable. That's been the truth with anything. When we pivoted to cars from carriages, you know, there were speed bumps. We had to build roads and do all these different things. And there were struggles in the beginning, of course, which is true for any new technology, right? But it doesn't mean the technology is not, like, good or useful or efficient, you know? Yeah, I do drive a twin turbo V8, and I love cars, bro. I grew up, I was a tuner head. Like, I was like a JDM. I had like a Honda Prelude 5-speed. My friend had a Type R. We used to race. I used to go to the track in Louisiana. Like, I love cars, bro. I really love cars. But again, I could buy whatever gas powered vehicle I want right now, and there's some EV that will smoke it right now, like, easily. You know what I mean? And so you can't turn a blind eye to that. It's just the reality of where things are at now. Why? EVs are more efficient. I hate to say it, they just are, you know. Love you. Have a great day. All right, guys. Hey, we got 3 minutes here. 3 minutes. Yeah, as cruel as it sounds, adapt or die, 100%. Again, SPY is still pretty flat. The whole market's waiting here. And again, guys, we got payroll numbers expected at 180K. Unemployment expected at 3.9%. Let me know last minute predictions in chat. We got 3 minutes last minute predictions in chat. Where do you guys think these numbers are going to be? Last minute predictions here, guys. Where are they at? Where are they going to come in at? Let me know. It's time. Yeah, I had like a 97 Honda Prelude. It was dope. I liked it. Yeah, I want a 92 Acura NSX. They're super expensive right now, but I want one. All right, team. Hey, 2 minutes here, team. 2 minutes. We got about 1,400 people here live. Almost 1,500 people here live. Again, hit the subscribe button. Hit the notification bell. I appreciate the love. Again, I disagree with the poll today. I think higher payroll numbers will cause a negative market reaction and lower payroll numbers will cause a positive market reaction. I disagree with the poll, in all honesty, today. Which chart? Zoom in on what chart? Here's the Dixie on the right. Here is the SPY on the left. How much are the new Acura NSXs? The new ones are cool, bro. How much do these things run, though? So the ILS and the NSX are no longer going to be available after 2023. That sucks. The problem is not enough people knew about NSXs. Modern age. All right, guys, here we go. We got 40 seconds, guys. 40 seconds. 30 seconds, actually, but hey, it's time. Market is priced to perfection. Very likely the market will just sell. No, they're like 140K, 150K is what I'm seeing online. All right, guys, we got 20 seconds here. 20 seconds, guys. 15 seconds. Market's priced to perfection. Real one's new. Yeah. I mean, accurate NSXs are really nice. But here goes the data release here. All right, guys, here we go. All right, here we go, guys. All right, team. So, again, payroll numbers just dropped. Payroll numbers just dropped. All right. Carol like clockwork. Payroll numbers just showed up at 199,000, higher than expected. Higher than expected at 199,000 for payroll numbers. Unemployment numbers came in at 3.7%, lower than expected. Again, guys, you're welcome. Okay, you're welcome. I went way outside of what was expected today versus everybody else. I had a lot of people arguing with me. You're welcome. You guys see what I was saying is absolutely true. Absolutely true. Higher than expected payroll numbers, 199 versus 180. Lower than expected unemployment rate, and the market has reacted negatively to it. I told you guys this would be the market reaction. This is what the market is fearing. The market is still fearing inflation right now. And so in that regard, the market's still fearing inflation. The market has reacted negatively to economic growth. You know, payroll numbers coming in high, unemployment coming in low, market is down on this report. Now, what it does moving forward, we don't know. But again, you have to understand economics to understand this stuff, guys. Like, we talk about this stuff all the time. This is why. Like, you start to understand how it moves if you watch it long enough. Like, if you watch the market every day, you start to really understand these things. And again, if you want somebody that actually knows what they're talking about versus a lot of other people I see right now, hit the subscribe button. You're welcome. Again, unemployment rate lower than expected. Payroll numbers higher than expected. Market reacting negatively to this. Again, you're going to still have some people, I'm sure, arguing that this is somehow not because the market fears inflation. But you guys know what it is. Market's down. Again, you have to understand economics. And so, again, I told you guys this would happen, and this is what happened. I didn't say anything was going up, OJ. What I said, again, if you thought I said it's going up, again, chat, my guy's just trying to disagree. What did I say before this report? Does anybody know? Let's hear it in chat. I don't even have to tell you guys what to say. What did I say before this report? I said if the market comes in higher than expected for payrolls, the market is going to drop. This is specifically verbatim what I said. Market's going down. Higher payroll numbers. You're welcome. You said if it's higher, we will tank. You said if it's high, market goes down. If numbers are strong, market will tank. Exactly. You know, again, people are just going to try to, hurt credibility any way they can. Usually it has to do with jealousy, you know what I mean? But, like, in the end, you guys know what's up. Again, follow somebody that actually knows economics here because we told you guys this would happen. You have to understand, again, you have to pay. The way you understand this, guys, is by paying attention to the Fed. Okay, you pay attention to what the Fed says. Okay, you pay attention to what Powell says. All right, what Powell said was that specifically the labor market was too strong. It was too resilient. It was too strong of a labor market. Okay, and that the labor market needed to cool if we're going to hit our 2% inflation goals over time. Right? And so what does that mean? That means that higher payroll numbers is bad for right now. It's bad for inflation. It's worse for inflation fears. And so what does that mean the market wants? That means the market wants a lesser, more cooling labor market, i.e. higher unemployment, lesser payroll numbers. And that's not what we got. And so again, the market's reacting negatively because of this here. Hope you understand. Unemployment rate came in at 3.7%. It's super obvious. Yeah, bud. Here, now. You have schoolwork you still have to do. You cannot do scratch at all until you finish your schoolwork. You still have your report. Your mom told me. Yep.
Yeah, but before Mom left, I asked her if I could play scratch when I was done, and she said if I asked you.
Okay, here. Listen, dude. I'm working right now. We'll talk in a little bit. Okay. No, you can't play scratch. I told my son, I was like, listen, you're throwing a fit in front of 2,000 people right now. It might be time to, Oh, I don't trade this stuff. Nobody, I mean, you know, I don't trade this stuff. Nvidia coming back. Top 3 worst timing in the world right now for sure. Yeah, dude, my family, it really is. Oh, I could definitely say I told you so. Listen, I'm top 3 most right or wrong traders in the world right now, depending on how you look at it, bro. I could definitely say I told you so. Again, a lot of people seem like they're mad because they were wrong, and that's okay. Where's AMD at? Is AMD ripping up? AMD is ripping up, man. Again, I wish I was still holding AMD. Where's Nvidia at right now? And again, if you haven't already, yeah, we got a bunch of people I've never seen before creating fake accounts trying to make it seem worse than it is. And again, hey, keep on doing it, man. If that's how y'all are spending y'all's time, it's all good. Again, a lot of y'all don't understand trolling or sarcasm, but that's all right. The 200 weekly for a retest, hey, we'll see. Again, if y'all haven't already, check out Top Step. If you want to learn how to day trade with limited risk, check out a funded account program like Top Step. If y'all want to see what I'm up on the day here, I mean, a couple people active. I am up currently about $300 or so on the day. But again, we're not trying to be day trading gurus, but if you want to learn to day trade with less risk, try a funded account program. What they do is they give you a demo and they test your skill. And if you can hit the target on the demo without hitting the max loss, and with following the rest of their rules, they fund you the same amount. The base one's $50K, so it's if you could pass it, you get $50K in funding with a 90% split, and they pay out millions, fund thousands of traders every year. They pay out millions in actual withdrawals every year. And again, it's very similar to day trading stocks. There's just no PDT rule. So you can buy market, buy bid, sell the ask, just like stocks. If you look at this, I'm basically trading the Q here in futures. And it's really the best of both worlds. If you lose, you're only out $49. And to be fair, I'm certainly biased in their favor because they're a sponsor of mine. And I think most people are going to lose because most day traders lose. Doesn't matter whether they're on Top Step or somewhere else, most day traders lose. The difference is that if you lose on Top Step, you're out $49. Great way to learn how to trade under pressure with less risk. If you don't have that much equity, you can try this out for very cheap. And if you're good enough as a trader to pass it, you can get 50 to 150K in funding with a 90% split, free funding coaches, no PDT rule in futures. Great way to help support your boy here. Here's the link. Check it out. Oh, I'm definitely top 3. Told you so traders in the world right now. Yeah, we're gonna have to ban the trolls. Tesla's recovering. I hope it does, bro. I'm in Tesla right now. Apple's starting to recover as well. But again, a lot of people thought that we would probably react negatively to payroll numbers. React positively to higher payroll numbers. And so, you know, listen, when people lose a bunch of money taking the wrong direction, they get kind of emotional about it. And that's okay. Listen, I'm here for you guys. Listen, you can let it out here. I'll be your huckleberry. It's all right. With that said, though, guys, anybody that's actually been paying attention to the stream for the last few hours understands I broke this down exactly how I should have, which is that higher payroll numbers is going to be seen as a negative. Lower payroll numbers is going to be seen as a positive. And so again, market reacted pretty negatively to higher payroll numbers and even unemployment. The shocking part about unemployment is that right now the market genuinely is in a market which fears low unemployment. The market wants less people working. So the market actually looks like wants higher unemployment, lower payroll numbers, which again signals a more inflation fearing market right now. Yeah, we got Jerome Powell's speech. We'll see what he says regarding the labor market. I'll tell you what he probably will say. He will almost certainly say the labor market is too resilient. He will almost certainly say the labor market is too robust, you know, and the jobs market needs to cool in order for us to hit the 2% inflation target over time. That's what he said last time. That's probably what he's going to say this time as well. Is this due to seasonal hiring? This is mostly from last month. It could be from fall hiring, but again, understand that buybacks are at historically high levels now. Companies are pushing stocks up. Sorry. I'm trying to make my son do his homework in the background, and he is not happy about it. Hey, thank you, Lucas. Right, exactly. A lot of people don't understand. They're like, oh, you didn't take any trades, bro. It's like, good. I'm not a gambler. You know what I mean? Like, a lot of people are just following just straight up gambles. Again, in the end, I don't claim to be a guru. I don't claim to be a good trader even. Like, we're mostly about economics. Like, mostly what we cover here is economic reports and data. Now, you got some traders that are just gambling their hearts away on these reports, taking huge positions, trying to basically gamble on what they think the outcome would be. But in the end, if those people weren't trading stocks, they'd probably be putting it all on red in roulette. The reality of it is nobody knows what these reports are going to come in as. The people who are taking the biggest positions ahead of these are straight up gambling on it because the edge there is so infinitesimally low. It's not worth it, guys. It's not worth it. Now, it's the same people buying courses on how to, turn $1,000 into $20K in a week using penny stocks or whatever it is, right? The reality of it is most day traders lose money, right? I don't want to be another day trading guru. And again, part of my stream is sarcasm. Like, I'm kind of like a trading brat. I shouldn't have to explain this, but part of my stream is sarcasm. I'm kind of like a trading brat who trolls people about how great I am. I'm definitely top 3 most humble traders in the world right now. All right, if you haven't figured that out about the channel yet, I shouldn't even have to say it, but, hate away, guys. The trend is your friend. Any videos about your indicators and trading play? Yeah, we got a lot of them. Yeah, I use TOS, I use Quant Tower and futures as well. Billy Bob's course is great though. Top 3? Is it top 3? Powell wants all to lose money. He will raise Thursday. But yeah, the reality is the reason we really get these type of reactions is because people don't like to be wrong, right? And so if you're one of those guys that are telling us that the market's not fearing inflation and that the market wants to, that the market doesn't fear inflation, and you're watching a bunch of experts that tell you whatever it is, and then you're wrong about it, I think in the end, instead of being like, yo, I was wrong, I think a lot of people get kind of weird. There's a lot of ego that floats around. And it is what it is. Oil starting to bounce up a little bit. Definitely top 3. Yeah, there's not really any more speeches today. John, you need some kind of paragraph for people to read. Yeah, for sure. People just struggle, man. Again, like, I don't mind the trolls because it makes the stream a little bit more entertaining. And so, like, I'm okay. Y'all can troll away, but you'll get banned for life. I'll hate you forever, but you can troll away. When you're this humble, I mean, it's hard not to say I told you so, This market won't last long. Sell me a course. Bro, my course is going to be one word. It's going to say buy the dip. That's it. That's all it needs to say. Y'all are lucky I'm gracing you guys with my sentence there. Buy the dip. We are bouncing back up, And again, I hope we do. I'm bullish on... I hope the market goes up. I genuinely do. You know, I truly hope the market goes up. That's 3 words. Did I say 1 word? I meant 1 sentence. You know, I meant to do that. You know? Yeah, I think we're going to have some volatility at the opening bell. I hope we do, at least. You know what I mean? I think we should have some volatility at the open. Again, I hope we do. And again, if you haven't already, check out Top Step. If you want to day trade, again, there's no PDT roll in futures. I might buy this dip, so I'm going to actually try this long, but it might also be choppy at the opening bell. Luckily, we're up a decent amount today. But I'm going to buy this dip. It looks like a cup and handle breakout pattern for me, right? And again, if you want to learn to day trade with limited risk, maybe you don't have that much money, maybe you don't want to lose as much as most new traders do in the beginning, try a funded account program. Again, the futures market, very similar to stocks. I can buy market, sell market. Look, we're up about 140 there. We're going to cut that. We are now up about 370 on the day, about 370. We'll take it. Very quick little scalp there. And again, we're going to keep trying to grind this up. I'm not sure if it's going to keep moving up. We do have this short-term trend here. But again, if you want to day trade, try out the futures market. There's no PDT in futures. Again, you can buy market, sell market, all that good stuff. Top Step's the most legit funded program in the world. They pay out millions, fund thousands a year. And again, I'm going to put this link up. Great way to help support the channel. They're a sponsor of mine, though, so I'm super biased in their favor because they pay me money. But check them out. South Korea temporarily banned short selling. Yeah, I saw that. All right, guys, I'll be right back. All right, guys. It recovers and we go to Santa market. I hope we have a Santa rally this year. I really, truly do. Like, I hope we have a Santa rally. No, I mean, the market was doing whatever it wants to do. We got the reaction from it. You can see the reaction here. Whether it rebounded afterwards is relatively insignificant compared to the reaction. I always go long at the bottom. Yeah, I mean, I always try to play overreactions anyway. Oil actually bouncing up a lot today as well. Again, the dollar index is completely flat too. No, it's non-farm data, KC. So it's basically everything besides farm payrolls is what it is. Apple kind of still flat. Yeah, we have the University of Michigan Consumer Sentiment Report today as well. That drops at 10 a.m. today. Expectations for that are 4.3% for 1 year. Inflation expectations for 5 years at 3.1%. Yeah, AMD rip it up after their investor day. If you look at AMD here,
AMD at 130s right now. Crazy big day. They had their AI event that made some big pops. And again, that's kind of dragging the market up as well with it. So regardless of payroll numbers, if you want to know why the market is bouncing like this right now, team, if you really want to know why, number one, we had bad payroll data. We had higher than expected payroll numbers, which signals a stronger job market than what the market actually wants. But the market's actually bouncing back because of strength in microchips. AMD is ripping up. It's at about 130 right now, about 130 in AMD. So AMD, you can kind of see, has had this huge upward move, which has influenced the rest of the market. And AMD is not that strong of a stock itself, but it influences Nvidia, which is the leading stock in the stock market over the last year. Nvidia is probably the most influential stock, except for maybe Apple, that we've had in the market over the last year plus, right? Is specifically Nvidia. And Nvidia had a huge, big run based off of AMD. And again, most of this AMD hype came from their AI investor event that happened, I think it was yesterday or the day before. Definitely one of the top 3 oil markets ever. Yeah, again, guys, I'm going to just tell you this. Like, again, there's a lot of people that are just going to try to disagree with whatever I say. If you're one of those people, you're not going to last very long. You know, you're just not going to last very long. You know what I mean? And so it's fine if you disagree sometimes. And as long as, like, if it's sometimes, it's fine. But if I label you as a person that just sits around waiting to disagree with everything I say, you're going to get banned pretty quickly, you know? Unemployment was lower than expected. So unemployment came in at 3.7%, at 3.7%. So whether that's good or bad, like I said before the report, it depends, right? Unemployment's more nuanced. Unemployment can still come in low and that still be seen as a positive. Conventionally it's good, but in an inflation-fearing market, again, it's pretty nuanced. Yeah, for sure. Nvidia, AMD lead the AI market, except for maybe like Microsoft, which again, if you look at even Microsoft right now, Microsoft had a big pop from this, right? And so most stocks reacted negatively to unemployment or to the payroll jobs report. You can kind of see that here, right? So people acting like I'm wrong or whatever. Again, you can kind of see this here. You can see the reaction, the direct reaction to payroll numbers, which was a dip. But since then, AMD has been on a crazy big run, since then. If you look at Nvidia and AMD, both of these are flying up right now. They're at about 130s, Nvidia has been following it up with it as well. So microchips have popped up the market over the last like 20 minutes or so. I'm seeing if there's news here. I'm trying to find it, but I'm in Google right now, and Google's had some big runs. I took a little bit of profit, or maybe I didn't. I can't remember if I took profit yesterday or the day before, but I did take some profit in Google. It's had a crazy good run too. Ask yourself, in terms of coming out with new tech to make money, do you spend more money to develop it faster with the best equipment or the cost-effective route, AMD? Yeah, I mean, it's no, you're good, Sam. You're good, brother. You can correct my math if you want. It's all good there, bro. Definitely top 3 worst mathematicians in the world right now, for sure. But no, you're good, man. I'm not talking about you. There's a couple people that, and again, I think a lot of them are probably, you'll start to notice trends in how they talk, right? Most of these guys are people who create fake accounts, get banned, create another account, get banned, you know what I mean? And just try to throw me off. And when you stream like I do, like again, we got over 1,000 people here. I'm used to it, to be honest, especially on streams in which we've got 1,000 people plus. Like the trolls come out, and that's all right. That's part of the channel, you know? I mean, you'll get banned for life and I'll hate you forever, but it's part of the channel, you know? Microsoft and Meta buying AMD chips, dropping Nvidia. Here, hold on. My son's waving for me. Hold on one second, guys. I'll be right back. Again, while I'm gone, does the market close green today? I'm going to end this poll right now. I'm going to end this poll. Tell me, does the market close green today, guys? Yes or no? Does the market close green today? Vote on that poll. Technically, right now, the market's pretty flat. But again, will we close green? I'm not sure. All right, we're back. Bro, my family has the worst timing they could ever have with everything. Yeah. They wait for like the worst time. Wait for extreme greed. John will hit him with the good day, sir. Look, Taylor trades live. Listen, bro, I'm going to tell you this, man. While I appreciate you here, do not come to the, and again, I'm trying to think of the best way to put this. The way to grow on YouTube, brother, is not by going to people's stream like mine and telling people that you trade live, right? Like, you're getting the best plug you can get right now. But that's not the way to grow. That's going to burn bridges. I'm being nice about it because I understand your small channel and like you want to grow. And I get it, bro. I really do. Like, I was there too, right? I get it. But the way I grew was not by going to other people's streams and plugging my brand. That's going to burn bridges. It's going to piss off the bigger streamers because, again, nobody wants people trying to scalp their own viewers. You know what I mean? Like, that's just going to bother the bigger channels. And so if you want to participate here, all good. Do not plug your channel. Do not plug your channel. I don't think today is triple witching, is it? Third Friday of December? Nah, it's definitely not triple witching day. Triple witching is not, it's on the third Friday, which is not today. Triple witching day is going to be on the 15th. First Friday was the 1st, second Friday was the 8th, which is today. Third Friday is on the 15th, so triple witching will be on the 15th. Okay, all good, Taylor. All good then, brother. Yeah, Brazilian Jiu-Jitsu. I'll talk about BJJ with all of you. Definitely top 3 worst white belts in the world right now in BJJ, but I'm actually pretty good. I think I'm good. If you ask the other white belts at my gym, they'd probably say I'm pretty good, right? If I have a flaw, I'm maybe a little bit too intense when I roll with people, but I've asked my coaches, I'm like, hey, do I roll too hard? And they're like, nah, But I think I'm in the morning class, and there's a big difference between like us morning class people and the night class people. The night class people has much more older people that are doing it, people are just older in the night class, and so they're certainly less aggressive than we are in the morning class, but we've been taught to be aggressive. Like, we start standing, we do takedowns, all that good stuff. The night class basically always starts on their butt. They basically butt scoot to start, and so if I have a flaw, I may be too aggressive, if that can be a thing in jiu-jitsu. But I'm quick, and I have good hips. Yeah, go ahead and plug it, Bruce. You got a BJJ channel, bro? Y'all go check out my guy Bruce's channel. Do you have one, bro? Let me see. Let me go to your channel, dude. You do. You only got one video from Disney. You know? Are you like a well-known dude in jiu-jitsu, bro? Let me see. And if you are, the real question is it the real you, or are you somebody else? 2nd degree black belt. I have nothing to plug. I just want to give a huge shout out to my landscaper Raul. Hey, shout out to Raul, the GOAT. Top 3. Hey. It's 8 a.m. for me right now. Yeah, I can leg kick too. You know. Bruce said he would fold you like a pretzel. Bro, I would guillotine you in about 30 seconds, dude. Come on now, man. You know. You would try to take me down, bro. I would sprawl. Either guillotine you right there, take your back, you know, and then that would be that. Apple's starting to push up. It's at 194s here. Market's kind of flat here, though, relative to when the report came out. We're actually pretty neutral. Yeah, my son's doing some. My son's been rolling too. I taught my son to sprawl the other day, bro. Y'all want to see? I taught my son to sprawl the other day. I brought him to jiu-jitsu, bro, and people would grab his legs, right? They would grab his legs. And he would just basically sit on his butt and then get taken down, right? And so when we got back from class the other day, one of my skill sets, like what I'm good at, is sprawling, right? Somebody grabs my legs, bro, they're going to get sprawled down. I'm going to take their back almost every time. I do it every time. And so what I drilled with my son when we got home was sprawling. I said, listen, bro, anybody touches your leg, dude, you shoot back, you sprawl quickly, you drag them down to the ground, and then you immediately pivot to their back and get them in seatbelt grip and take their back and rear naked choke them. You know, is what I told him. And we drilled this like 20 times. He like hated me afterwards because we had to drill it so much. But then when I brought him to jiu-jitsu yesterday, the first thing that happened was some kid tried to grab his leg and take him down. And bro, he sprawled like a pro to the point where coaches were even like, dang, Jack, that was a good sprawl, bro. He took the kid's back. The kid rolled over. He got him in mount, won the round, you know. And so you love to see it. Proud dad right here. Proud dad. Yeah, I'm definitely BJ Penn. I just have makeup on, you know. I'm using AI to like change my face. I'm really BJ Penn, guys. You know what I mean? Alright, guys. Hey, Google just cracked lows, though. Again, watch microchips today. Watch AMD. Stuff like that. And again, if you haven't already, guys, check out Top 7. If you want to day trade with no PDT rule, the futures market's what you want to do. Again, I can buy market, sell market. Again, we are up a cool 370 on the day, 370. We'll see if we can continue. We got about a 5-to-1. People can say whatever they want about my trading or whatever it is. We got a 5-to-1 win-loss ratio today. All right, like people can say whatever they want. They can say, your trading strategy doesn't work or whatever they want to say, right? But like, it doesn't matter. In the end, we're funded in multiple accounts. And again, my system is actually really simple here, guys. Like what I do is actually very, very simple. I build up a cushion for scalping, right? People are like, oh, he scalps too much, bro. I scalp all the time because that's the way I build up a cushion. I build up a cushion of $100 to $200. If I can do so successfully, then I'll scale up my size and I'll start taking more than one contract of the NASDAQ or the E-mini, you know. And then if I lose there, I'm closer to break even because I already had a cushion prior to taking that risk. If I'm unable to build up the cushion, I just walk away. If I lose a couple $100, I just walk away with a small loss. But if I build up a cushion and then I'm able to swing larger, I can have these big winning days and these small losing days. And that's the way I get funded on these funded account programs. And that's the way I build up the funded account programs too. It makes a lot of sense. I can't guarantee you're going to be able to do it. But these funded account programs like Top Step, the base one's $49. And if you use the system I just talked about, it makes a lot of sense. I can't guarantee you're going to get funded or anything like that. Not an investment professional. I don't want to be another day trading guru out here. You know, my channel is mostly about economics. But if you want to get funded in day trading, most day traders lose money. Almost all day traders lose money. And so you can either try to look cool on the internet, putting up thousands of dollars and risking that yourself, or you could try a funded account program like this and risk much less. And I think that makes a lot more sense. Sure, V. I'm a Muay Thai guy. We don't let you get the guillotine. Bro, it's not a choice, dude. It's not a choice, bro. You know? Bro, I'll collar tie you, drag your head down, and then guillotine you, dude. You know? That's all I'm saying. Top 3 guillotiners in the world right now, for sure. No, I'm just joking. You probably beat me up, realistically. It's all good. Yeah. Yeah, I mean, again, guys, you gotta understand, like, there's already enough day trading gurus out there trying to give you these bold predictions about stocks and all this different stuff. You know what I mean? Like, there's so much of that stuff already out here already. Like, you don't need me to do that. Again, the problem with that is, like, I would rather just tell you guys, look, I can't guarantee anything. I have no idea what I'm talking about. I might be wildly wrong about everything and anything. I mean, I definitely still say I told you so, because I did. But, like, I'm mostly just trolling you guys when I do that. Even though apparently some people take it really personally, I guess. But still, like, listen, guys, we have fun with it. And I hope you guys understand. Like, really, what I'm trying to teach you guys at home, if you guys have been watching the stream today, what I'm really trying to teach you is economics. Like, what I told you guys today was economics. And, again, it should make sense. It should make a lot of sense. Somebody's asking me to show you Chart Prime. I'll show you Chart Prime, and this is something that certainly helped my trading too. This is a trading view indicator service. And again, I'm going to preface this with, like, look, I can't guarantee you're going to make money or anything like that. Nobody can, right? But this is a trading view indicator service. There's so many ones that they offer. Chart patterns. I can put up chart patterns. They have a back tester if you're a lifetime member. I can put up the screener, smart money concepts. I can put up market dynamics, different oscillators. My favorite one, though, if I'm scalping on a 1-minute chart, is the Market Oracle Pro. Because again, like, let's back test just today's price action, just today. So today started. Sorry, let me find. What time does this say I'm at, bro? Hold on. Why does it say right now we're at 2 p.m.? Anyways, I don't know when today started, but that's all right. We'll just go back and put this up. We'll also put the chart patterns up. But again, let's just take a look at this the last couple minutes here. Sell signal. And again, I can't guarantee you're going to make money. Nobody can. They are a sponsor of mine. I'm definitely biased. But, like, look at this. Sell signal here. Nice dips. Buy signal here. Literally called the bottom. Nice bounce. Sell signal here. Nice dip. Buy signal here. We got a little bit of a pop from it for sure. Strong sell signal here. Boom. You got the big breakdown data from it. And again, so there are 1, 2, 3, 4, 5 for 5. Or no, 4 for 4 right here. 4 for 4. And if you go back and test it even more, it could be useful. The other one you can do, this is a 1 minute, this is a 5 minute chart as well. Look at the strong signal here too. So strong signal here, this is probably where the day started. Nice little bounce afterwards too. And so again, 5 for 5 right there. Sell signal here. You get a drop. I don't think you guys can even see this. But again, that's 6 for 6. 1, 2, 3, 4, 5, 6, 7. All right. Maybe my math is off. Yeah, that's 7 for 7 here today. 7 for 7. I can't guarantee you're going to make money. Nobody can. But there's so many stuff that you can use. You can use the regular market oracle and see reversals. I can put up chart patterns. I can use any time frame in stocks, crypto, forex, futures. And it does really good at calling these tops. Like look at this top. Sell signal. Beautiful bounce there. Beautiful dip there. I mean, again, reversals can be powerful here as well. Look at the reversals. And again, I always use the engulfing candles and the reversal signal showing up together. Reversal down signal here, nice little drop. Reversal up signal here, nice little bounce. Strong sell signal there, nice little dip. And so again, I can't fake this, you know what I mean? But I also can't guarantee you're gonna make money or anything like that. It's a company called Chart Prime. If you haven't already checked it out, it's like $50 a month if you use my link. You can also use this right here. That might help you a little bit more. Check them out. Great way to help support the channel. Again, they are a sponsor, of course. I'm biased because they pay me money, but still, I consider them very useful. Very useful. If you want to check it out, again, hit the link. I listen regularly to learn. Your style is perfect for me and you never condescend. Thanks. Hey, thank you, Jack. I appreciate it. The only people I ever condescend are people who, like, again, if you're one of those people that just kind of sits around, like maybe something I said 6 years ago bothered you, and so now you're like obsessing over me, and which does happen. You might not believe it, but this actually happens. And so you're just kind of sitting around waiting to find something you disagree with so you can tell me. Like, that's the only, eventually I'm going to be like, yo, you're just being insecure. Like, go find something else to do. You know what I mean? Like, I can look at the chat logs and see, and like test somebody. If somebody's doing that, I can look back at their name and see what they're saying over and over again. And so if everything I look at you're saying is negative, I'm going to label you one of those people. Even if you maybe not. Maybe I'm doing it unnecessarily. But like, those are the only people I ever try to condescend. Everybody else, it's all love. I might disagree with you, but like, I try my hardest to admit if I'm wrong. Definitely top 3 wrong traders in the world. As well as stay humble. And you guys know me, like, I'm definitely one of the most humble people in the world right now. Like, humility flows through me like water, because when you look this handsome and you know, good looking, it's very hard to not be humble because it's just so easy to be. And so, hey, hit the like button, hit the subscribe button. I appreciate the love. We will hit 16.2K. Yeah, we'll see. Hey, I hope we do. I hope the market goes up. I don't want to see it go down. It's very flat, though, since this report. We're slightly down relative to when this report dropped. Report came out up here. We're down slightly, but we did have a negative reaction. Again, what drugged the market up after this report was AMD and microchips. If you look at AMD, it shot up, and now it's starting to dip back down. NVIDIA shot up with it. It started to dip back down. Now, NVIDIA actually under the previous closing price. Your beard sucks. Oh, man, shots fired, bro. That hurts. That hurts me right here in my heart, man. You know? How dare you, sir? No, I'm just joking. Dude, I'm never sarcastic. I don't even know what sarcasm is, dude. Yo, as they always say, I'm the Ryan Felipe of trading, okay? You're welcome. Top 3 most handsome ever. Ask my wife. She would agree with that, you know? NVIDIA down at 465s. Yeah, be bigger, better, bolder. Be John, you know? All right. You think I'm a redhead, Randy? How dare you, sir? I mean, I'm not against you guys redhead, but bro, my hair is not red. The only part of my hair that's red is slightly red beard. You know, a slightly red beard. Okay, like I got some red in my beard here, but it's not like the full beard. You know what I mean? I'm one of those guys that got brown, like dirty blonde brown hair, but a little bit of red in my beard, you know. My last name's London, and so I'm assuming we got some Irish in my DNA. You know, I actually did a DNA test. It came out that I was 60% English, 15% French, probably Cajun. I'm from Louisiana. I am 4% African, believe it or not, and a bunch of other small percentages. I had like a bunch of other small percentages. I had like Mongolian in there and like a bunch of other stuff. But like that was my DNA. Interesting for sure. Carrot Top? How dare you, bro? How dare you? Hey, thank you, Shaz. I appreciate it. I was kidding about your beard. Honestly, like I said, I never was able to grow a beard as a kid. Because London is famously in Ireland. I know Ireland and England are different, but they're both part of the UK. And they're right next to each other, which is why I made that assumption that there's some Irish in there somewhere, you know? Kenny, every white guy ever wants you to, like, you know, that's like every white guy's dream for you to tell me that. So thank you so much. I appreciate it. You know? Yeah, carrot chin, more like it, you know? Top 3 greatest. Yeah, Pawn's got me beat on the beard for sure. That's definitely for sure. All right, Apple started to dip a little bit. The Nasdaq, look, the Nasdaq's starting to fall down. Nvidia dipping as well. Apple dipping. Microsoft dipping. Google dipping. Microsoft at 369s. I'm in Microsoft right now as well, but my portfolio is actually down on the day. Google is dipping a little bit. We do have Exxon moving up some. All right, guys. My eyes are green. My hair is like brown. Like dirty blonde, if you can't tell. Mostly brown, though. My beard is red, you know. I'm a man of the world. NASDAQ, again, still under 16,000. Watch 16K right there. That's actually a big level. That's 16,000 right there. Again, Microsoft at 369.5, so right around 370s. We got 16,000 right above us here on the NASDAQ. Nvidia still dipping down some, so again, look at Nvidia. Nvidia at 464.60s. I don't know what the market's going to do. Next week's super busy, though, Ross. So Ross says, is the market going to stay flat? Genuinely no idea. Again, what I will say is that next week's super freaking busy, man. Like, we got a lot of stuff happening next week. We have, just to put this in perspective, we have CPI, PPI, jobless claims, retail sales, the Fed rate hike decision. I think we got like the Bank of Canada rate decision, the ECB rate decision, I think. Let me look at next week. So yeah, next week we got CPI, federal budget data, PPI, FOMC rate hike decision and press conference, jobless claims, retail sales, the Philly Fed index, business inventories, the Empire State Manufacturing Survey. Friday is also triple witching day, I believe. We have industrial production and capacity utilization next week. And then that's not even including earnings, which I don't think we have any, but still, maybe we do. But next week's super busy, like almost every day except for Monday. Oh, we also have Oracle earnings on Monday too. So we have Oracle earnings Monday. Probably not going to stream it, but we'll see. Adobe earnings on Wednesday. Yeah. OPTT, man, OPTT is still a stock, bro. I remember this penny stock. Well, there's no such thing as quad witching day anymore, Dario, because witching day refers to a day in which contracts expire, right? All major contract types. Now, you've got options. You've got the conventional four for quad witching day are stock options, stock futures, index options, and index futures, right? Those are the conventional four that make up the quad witching. The problem, though, is that there's no such thing as stock futures anymore. Like, stock futures are no longer a thing. And so even when you hear people refer to it as quad witching, which we still do, it's actually technically only triple witching now, because again, quad witching stands for, if you don't know what quad witching is, or when you hear that reference, it stands for all four major contract types expiring same day, which is a notorious day for volatility. It's like an infamous day of volatility in markets, right? So it's something that a lot of people pay attention to. But again, the difference now is that we don't have stock futures anymore. And so there's no such thing as stock futures anymore, so they're not expiring. So really every time it's triple witching instead of quad witching now, but people still call it quad witching regardless, and we still do as well. But yeah. And listen, guys, we're here every day live teaching you guys about the economy. You're welcome. Hit the subscribe button. That's the least you can do here. Yeah, we do economic news every day of the week, bro. We do economic news every day of the week. We'll be live all day next week, or not all day, but we'll be live a lot next week. Pfizer said it's received conditional approval. Yeah. Dang, bro, we actually got a bunch of views today, so shout out to everybody at home, man. Hey, we appreciate the love, guys. Thanks so much, dude. You love to see it, guys. You love to see it. Will I close the day red or green in my futures funded account? Will I close the day red or green? Let me know. What do you guys think? Green or red day for John? Will I close the day red or green for John? Let me know. Let me get the music playing. What happened to the music? Let me see the new poll I did. Well, the market closed red or green. 55% say green. 45% say red. Greed. Hey. Definitely top three answers right there. Lulu had earnings yesterday. Did it really? Again, I don't like Lulu as a company long term. Again, I'm not against, like, again, and this is coming from somebody that lives with, like, two ladies that love Lululemon, right? My daughter and wife love Lululemon. My daughter's a teenager. My wife is, my age. Both love Lululemon, shop there regularly, right? I like Lululemon as a company, but I don't like holding it long term, and I'll explain why. And I've talked about this a lot before, and maybe I'm wrong here because it's been moving up, right? So maybe I'm wrong. I'm just gonna put that out there. I don't like holding stocks like Lululemon long term because they're less of a sure thing. Like, Lululemon is a fashion company, and again, I can only use my own upbringing as context to why I feel this way. Like, when I grew up, in the 90s and 2000s, American Eagle, Hollister, Abercrombie and Fitch were all like Dolce and Gabbana to a certain extent. Like, these were all big brands that like everybody wanted to wear and were like cool brands to wear, right? The reason I don't want to hold Lululemon long term as like a part of my investment portfolio is simply because they are a fashion company, and they might go up. And it's not like I'm shorting Lululemon. I just don't trust it enough. I don't think it's enough of a sure thing long term for me to hold, because what I do know is that fashion changes, brands change. Mostly it's a generational thing. So like, you can use social media as an example, where one generation grows up with a specific social media platform. The next generation wants to be contrarian to what the previous generation was. And so they use a different social media brand, and that kind of, can move social media brands. Same thing in fashion, right? A specific fashion style, a specific fashion brand might be big and cool, like American Eagle, Hollister, whatever it was for my generation, right? But the next generation might not want to be that way. They might not want to use fashion in that way. And so I think this is a less sure thing than holding some other stocks, and because of that, I've stayed away from it. But again, at the same time, maybe I'm wrong here. This thing's been ripping up. It's at 460s right now. It's at 440s. It's gapping down a little bit, but still, I just don't trust it. Is the easiest way to put it. It's not like I'm shorting it. And again, if you want to buy it, do your thing. But yeah. Right, Hollister, Abercrombie, yeah, for sure. But they're not big anymore, and most of them have failed. You still have American Eagle, but nobody's ever really there. The only brands that I would say are safe are like legacy brands like Nike, Adidas, stuff like that. Nvidia's starting to bounce up a little bit, though. All right, hey guys, we got 4 minutes here, 4 minutes. Bro, you used to walk into Abercrombie and Fitch, man, and it would be, smell like cologne. Got a bunch of shirtless dudes on the wall. Everybody thought they were cool in that store. Yeah, you got some like narcissistic dudes sitting out front like, what's up? Yeah. It was a clone in the mall. Hey. All right, we got 3 minutes here, team. 3 minutes. Doc Martens? Oh, bro, I used to rock Doc Martens, dude. Bro, everybody had a pair in the 90s, man. If you go really early, you had like your Jinkos and Doc Martens. You know what I mean? I used to wear Jinkos, free dress Friday, every Friday at elementary school. I had Jinkos on. And like the baggier they were, the cooler you were, right? Because it basically mean like my mom wouldn't let me get the super baggy ones, but I still had some pretty baggy ones. I remember I had like an alien on mine, free dress Friday. Oh, I had the Simbas. As a kid, I wanted to be Fred Durst, I was like a skateboarder, so like, you know what I mean? Crisscross will make you jump. Yeah, I've actually been trolling my daughter every morning. All right, guys. Hey, we got 2.5 minutes. 2.5 minutes. Yeah, every time I walk in, like, so I referenced wiggity, 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 whack to my daughter as like a troll against her, and then usually when I wake my daughter up, because my daughter gets up like around the same time as me to get ready for school, usually when I wake her up, I play some cheesy song and then hit her with pillows to wake her up. Lately that song has been Crisscross, and I turn all the lights on and I hit her with pillows and I play that song. She said it reminds her of a fever dream, but that's been the most recent troll that I've done with my daughter when I wake her up is Crisscross, the goat, Tommy Hilfiger. Yeah, Tommy Hilfiger's still a thing though. They're still out there. Hey, thanks so much. All right, guys, here's the opening bell. We got 1 minute here, team. 1 minute. Yeah, any recommendations on the cheesy, like terrible 90s songs to wake my daughter up with, let me know. You know, I'm open to them. Again, Lululemon rip it up a little bit. Apple push it up a little bit. We're still red slightly from this report. Microchips are mostly helping the market right now. Nvidia, AMD have pumped up a lot over the last like 20 minutes. Whole jock jams. Play some Creed, you know. She would probably like that one, Franny. You know, she likes Taylor Swift. Alright, Nvidia. And I dislike Taylor Swift's music, but I can respect the entrepreneurial hustle of Taylor Swift. She makes her money, man. I can't even knock it. Alright, guys, here's the opening bell. Hey, that's a good option. Milli Vanilli. Hey. Alright, there's the opening bell. Again, Nvidia rip it up right now, dragging the market up. Again, microchips are what's leading the market right now. We're up to 467s. Hey, thank you, Dominic. Yeah, definitely top 3. We appreciate it. All right, Nvidia ripped up, and now it's pulling back, retracing a little bit. We're going to wait some until we take any big size at the open. We're going to wait. We've already built up a cushion. We'll see if we can again. Again, Nvidia at 468s. We're almost up to 16,000 right now, almost to 16K. System of Down Chop Suey. Yeah. Nvidia up to 468s. Apple at 194s. Apple's starting to really bounce too. All right, we're gonna get ready to trade at the opening bell, guys. I guess I'm bullish right now. I'm gonna buy this dip real quick here and see if I can catch a little pop. I'm gonna buy this little dip, see if we get a retracement pop back up. Oof. All the way back down. Just gave about $200 back to the market. Still green on the day, though. I'll be right back. I gotta go check on my son who's here with me, so I'll be right back. All right, we're back. Sorry. I had to check on my son real quick. Yeah, AI's rip it up. I mean, Nvidia's kind of choppy at the open. Really, we're getting kind of chopped at the opening bell is what I'm seeing. I know futures contracts roll over soon, too. I see Nvidia start to ramp. 7 days until the rollover. Yeah, I know they roll over sometime soon. Tesla ripping up. Hey, I'm in Tesla. Good. Tesla is ripping up. Nice. All right, Tesla now starting to dip down a little bit here. Alright, so the SPY ripped up a little bit. We're taking some scalps on the actual E-mini instead of the NASDAQ. We're waiting for the NASDAQ to group together. We're up about 320 on the day, so we made back most of the losses we took. NVIDIA is what skyrocketed up, breaking highs, looking good here. And the S&P 500 is following it. Apple's starting to retrace some, though. So that might drag the market down a little bit also. Yeah, Rivian is up. It's up to almost 20. Apple's looking weak, though, and so I would watch. Apple's the most heavily weighted stock in the S&P, so Apple actually under the 200 EMA VWAP in the previous close. NVIDIA's testing highs up there, but Apple being the most heavily weighted stock is actually dragging the market down some now. All right, 1930s for Rivian. Rivian actually popping up. Apple's still looking weak. It's a very choppy open, though. I'm just glad I'm not losing too much on this because it really is kind of choppy and sideways. A lot of upward and downward. We got a very obvious opening range is the easiest way to put it. All right, we see a little mini flag here, right? But again, we're so sideways, I don't trust any of this yet. So I'm just kind of sitting here. We don't really have any good direction. I'm just kind of sitting tight. Again, Apple starting to bounce. It's at 194.20s here, so this might signal some strength. NVIDIA dipping down some, but we're at the VWAP now. So, oh wait, Apple just rejected. I was about to buy this, but Apple just rejected. Maybe I should have bought it. I'll try to buy this here, but it's risky. Take profits quickly if we can. All right, so we just locked in just a little bit. Again, we are now up 370 back again on the day, up 370, exactly where we were. Almost 5-to-1 win-loss ratio today. We'll see if we can get another position here. Yeah, I'm watching Tesla as well, Apple. Tesla is up a lot. That's good. I'm gonna try to buy this here, but it is risky. All right, there we go. All right, just locked in another $130 in profit, scalping that momentum. We're up about 5 on the day. Again, we're up about 5. Is Bitcoin running? All right, we're at 44.3K. Bitcoin is bouncing up some. Y'all feeling the song or not? Not? Yeah? No? Should have held that long position a little bit, I guess. Apple's starting to crack lows. Bitcoin rip it up, though. I'm going to go ahead and buy this. All right, just locked in a little bit more. We're up about 550 on the day. Again, people can say whatever they want about me scalping, but if I'm at almost 6-to-1 win-loss ratio doing so, I mean, again, people can say whatever they want, but, you know. I'm here for the sang only. Bro, if y'all want to hear this voice of an angel, you're going to have to pay me more. You know, I don't sing for free. Definitely top 3 greatest and worst singers at the same time. Nvidia up to 471s right now. So Nvidia's starting to rip. Apple's starting to rip. Apple now technically green on the day. See if my equities portfolio can help me with this. Oil's still doing okay. Well, a couple people have today, Rod, but SPY rip it up, Nvidia rip it up. Apple rip it up. I mean, we certainly have lost accounts, Pawn, you know, just to clarify. So, especially combine accounts. What I will say, though, is that my actual funded accounts, we have not blown one of those, you know. Again, if we actually look at my funded accounts, right, and I see a lot of other streamers that, like, it's like they're talking about being so profitable, but like when you look at when their funded accounts were made, they were made recently, which means they, you know, they lost their funded accounts. My funded accounts are from August and October, right? So I've kept these 2 funded accounts for months now. If you look at this, and I can prove this to you here. My funded account programs here, again, are from August and October. August, October. And so we've had these 2 funded account programs for a long time, you know what I mean, and we haven't blown them yet. And so, but we certainly lose combine accounts, you know what I mean. Pretty honest about that, though. Well, the strategy is the same way, Tessie. You trade small, you don't trade large. Biggest mistake people make with these funded account programs is that they just trade really, really large when they shouldn't be. You know, what I mean by that is, like, everybody wants to get rich, but the right way to manage these funded account programs is to take risks when you're trying to get funded. Like, on the combine account, take risks. Again, I'm going to preface all of this with, like, look, I can't guarantee you're going to do anything. Do whatever you want to do. I'm not an investment professional. I can't guarantee you're going to make money or anything like that. Nobody can. Always make your own assessment, trade responsibly. With that said, out the way, what I use for my accounts is, what I try to use is, I take risks when I'm trying to get funded, because you have to take risks or it'll take you months to get funded. That's what I did wrong in the beginning, was I tried to trade micros too much when really I should have been trading regular E-minis, that is. Once you're funded, that's when you scale down your size, trade really, really small, You trade small on the day when you're building up a cushion, right? So you try to build up a cushion of $100-$300 in your actual funded account, and then you take larger risks, like big risks afterwards, right? That means that like when you win big, but when you lose small. I still think that's the right way to do it. Yeah. All right, look, we've had 1, 2, 3, 4, 5, 6, 7 green candles in a row now. Bitcoin ripping up to 44,500. And again, if you want to check out Top Step, try to get funded using that strategy. I think it's the right strategy. You build up a cushion, you take risks with that cushion. If not, you don't take risks. Oh, wait, here. That was the wrong link, I think, actually. Where did that? I think I used that old link. Here it is. Hey, thanks so much, Sandy. That's the right link. Nvidia ripping. Yeah, Nvidia's ripping up. I kind of want to buy this dip here too, because we're over that big level here, and so if we get a large enough pullback, I'll buy it. Here, we'll try it here. We'll start scaling into a large position. And again, I'm gonna tell you guys this: we're gonna risk our profit on the day to try to have a big day, and if we lose this, we'll probably be back to break even. But if we win on it, it should be a pretty big win. We might not even have to, actually. Well, never mind. All right, we just made about another 100. I mean, again, we didn't have time to add to it, which is all right. Again, here's our graph on the day. We are up about 700. Or no, I'm sorry. We were up about 650 on the day, 620. Why do you think the market would go up? Because inflation is coming down and the labor market is resilient? Well, that's not what the market wants. I think it depends, though. Right now, the market's moving up specifically because of Nvidia and AMD. Right, like the microchip sector is what dragged the market up. Like, again, payroll data impacted the markets, but this was the impact. It impacted it negatively. You can kind of see that in the price action. I mean, I think that's very obvious. But you know, the market's not only going to move relative to the labor market. If you look at, like, if we put this up and we look at, like, Nvidia and you look at AMD specifically, AMD and Nvidia have been very strong, right? So AMD and Nvidia have ripped up since then. You know, so AMD and Nvidia made big, powerful moves to the upside. And again, if you see why, and then we got Nvidia. Nvidia CEO came out with, Nvidia came out with some news that said the Nvidia CEO is set to meet the Vietnamese tech government representatives for a potential semiconductor deal. That came out at 7:45 market time today, right? So this news came out at 7:45 market time today, or 8:45 market time. Okay, so this came out 15 minutes after the unemployment and non-farm payroll numbers come out. All right, and so this is why AMD's ripping up, and this is why Nvidia ripped up as well from all this stuff, right? And so the market's not just based off of one data report, it's based off of a lot. And with this story coming out about a big semiconductor deal with Nvidia in Vietnam, with Vietnamese tech and government reps, that's causing microchips to fly up today, and that's influencing the rest of the market because the market's up a lot. We might buy this dip again. Right, but we bought a quick dip. We'll let it ride a little bit here. We're up a lot. We might actually add to this now. Hold on. All right, so we're in 2 contracts here. I'm gonna go and take half of that off. Whoa, dude, why is it putting me way down here? All right, we're gonna go to get out that too. All right, so we just got out. We're up about 800 on the day now. We haven't had a losing trade in like a while here. You can see we got a 7-to-1 win-loss ratio too. A 7-to-1, look. 7-to-1 win-loss ratio. I'm using Quant Tower. Stay up, walk away. You might be right. You know, and again, I want you guys to understand something like basic support and resistance. 16,000, big psychological level. Where do we bounce? We pull back to that 16K. Where have we bought this up? Where did we buy these up a couple different times? At 16,000. We look for the bounce back of it. These are the last 2 or 3 trades were based around the support of 16K and the potential of that holding. Next 2 news, big impact. Yes, the next we got some news dropping in 9 minutes. Yeah, we got some news dropping in 9 minutes. And that's Michigan consumer sentiment and expectations, right? So that'll be somewhat of an impact. We'll wait and see, though. That drops in we'll cover it. It drops in 8 minutes or so. All right, so we're pulling right back down to 16K. Again, the problem, I'm going to slow down because we have this, and it's consumer sentiment data, right? So people are asking what this is about. This is consumer sentiment data. Consumer sentiment expected at 62 for December. So the University of Michigan Consumer Sentiment Index compares relative level of both current and future economic conditions. All right, so again, consumer sentiment. It's compiled from a survey. Prelim data is a little bit more important, and I don't think this one's prelim, but again, this one's expected for consumer sentiment at 62. We also have inflation expectations as well. Expectations for the year of 4.3%, 5-year of 3.1%. So we'll see if we come in better or worse for this. It's about consumer sentiment and inflation expectations, but it's not a huge report. Like this next one at 10 o'clock is not a big report. It's a medium-sized to small-sized report. Basically, it's not super impactful, if that makes sense. All right, guys, we got 6 minutes here, 6 minutes. Hospitals have lack of staff, even, yeah. I mean, it's a tough time right now in economics and markets. All right, guys, we got 5 minutes here, 5 minutes. NVIDIA dipping down a little bit, AMD dipping down a little bit. We've been basically neutral from this economic report today. Although we're moving back up to test 16K on the NASDAQ here. That might be relevant and important. But yeah, I mean, I think the difference now, David, and again, this is something that I was explaining to my daughter, right? I was explaining to my daughter what it was like growing up in the 90s and early 2000s, right? And what I told her makes sense is that people aren't going to want jobs like that anymore. Like, typically, young people would work at fast food jobs. It's kind of like an introductory job, right? It wasn't like, it was for young people mostly, like teenagers and stuff, right? As their first job. That's usually who hires fast food workers. But nowadays, like, okay, and again, I use skateboarding as my example. I'm going to use the same example to you all at home. Like, when I grew up, skateboarders, I skateboarded when I was a teenager, right? I was pretty good. For the time, I was pretty good. Nowadays, they got freaking 7-year-olds that would smoke me back then. But nonetheless, skateboarders used to have to send sponsors sponsor me videos like that they took on like a video camera, showing them their skills, and then the sponsor would sponsor them, and maybe they would like pay for a video shoot and editing and all these different things that they could use to grow a following for their skater, right? And that used to how it would be before technology and the internet really took off. But modern day, they don't need any of that stuff. And this is not specific to skateboarding. This is with everything, right? Nowadays, you don't need any of that stuff. Nowadays, a skateboarder can literally take the middleman sponsor out of the equation altogether. They have their phone. They can video themselves on their phone, edit it from their phone, build a following on the internet with absolutely no need for a sponsor at all. And so in that regard, times have changed in that way for the best, right? Like, my daughter says, oh, I would have loved to grow up in the 90s. I told her, I said, look, I know the young generation like romanticizes the 90s now, and the 90s was great. I love the 90s. I grew up in the 90s. But you got a lot of benefits and a lot of edge, more edge nowadays than you did back then, for sure, in a lot of different ways, specifically in regards to technology. And it's the same way with everything else. My overarching point, which I maybe started to ramble a little bit, is that you don't need to work those jobs anymore. You could do Uber and deliver food and not have to, like, you know, not have to deal with condescending like bosses or consumers. You could do whatever you want to do now without needing jobs like that anymore. You know what I mean? And so over time, it's going to get worse and worse and worse for those places because they don't need, because teenagers don't need jobs like that anymore. They can make more money doing less now on the internet. And I think that's going to gravitate more people towards that over time. And that's something that you're definitely seeing nowadays as well. And again, you got to put yourself in young people's shoes. Are you going to want to work those jobs for less? Most people aren't. Most people are going to say, hey, I'd rather work for myself doing something else and make more money and have more potential than spending all my time doing that. You know what I mean? All right, guys. Hey, we got 2 minutes. 2 minutes. Bro, it's been so long since I skateboarded. I teach my son now. But it's been so long, dude. I can still double kickflip, though. My daughter didn't think I could do one. And the other day, I grabbed my skateboard and I did a double kickflip. I could probably do a triple kickflip still, which is something that I could do back then, too. I can double and triple kickflip still, probably. The last time I did, my wife didn't believe me, and so she videotaped me doing a double kickflip. But it's been a while since I did one, man. I used to be able to triple kickflip just base off the ground. All right, guys. Hey, we got less than a minute. Less than a minute. All right, again, NASDAQ starting to rip back up a little bit ahead of this economic report. Again, it's not going to be, it might have a big influence. We don't know the impact of it, but in terms of like eyes on this report, I think it's less than normal. All right, guys, 20 seconds here, 20 seconds. All right, here, 3 seconds here. Let's see what we get. All right, there's the report. Consumer sentiment came in at 69.4, way higher than expected. Consumer expectations came in way higher than expected as well. Inflation expectations came in way lower than expected, guys. Way lower than expected for inflation expectations, and that's causing everything to rise. Again, inflation expectations came in at 3.1 versus 4.3%, 2.8% for 5-year versus 3.1%. Consumer expectations were higher. Sentiment was higher. Current conditions were higher. And so much better than expected reading here. The market is liking this report. And honestly, I'm actually technically green on the day now thanks to this. Let me see why. I'm actually nicely green on the day now thanks to this. So, hey, shout out to... Hey, we're green. I'll take it. You'd love to see it. Big pop. I'm going to go to take a little bit more profit here. In Disney. Just got out. Not out all of it, just out of some of it. Walgreens still pushing up. That's cool. PayPal up some more. That's nice. Etsy we're almost green on today too. ARM. Nvidia ripping up. Microchips looking stronger. Man, this definitely had a bigger move. Yeah, hey, this has definitely been a bigger move than I expected for this. Hey, market's popping up nicely here. With that said, though, guys, I'm going to go ahead and bow out for the day here, guys. Bow out for the day. We almost got 10,000 views for the total of this stream today, guys. So thank you so much. I appreciate you tuning in to the top 3 greatest market analyst and investor of all time ever in the world. For sure, definitely top 3 most humble also. I appreciate the love. Y'all, check out my sponsors here. If you want to day trade with less risk and ultimately risk less getting started, instead of putting up thousands yourself, try the futures market. There's no PDT rule. You can day trade the Q basically in what's called the NASDAQ. You can day trade the SPY and basically what's called the E-mini S&P on futures. You can day trade currencies, gold, silver. Patterns are very similar to large cap stocks. There's just no PDT rule. You can day trade short without restriction. And Top Step is the most legit funded program. They give you a demo. They test your skill. Just taking the challenge, build your skill. If you're good enough to pass it, they fund you with a 90% split. Free funding coaches, great resources as well. If you lose, which is most day traders lose money, you're going to lose much less typically than you would putting up the money up yourself. Although they are a sponsor of mine, I can't guarantee anything. Y'all check them out. Great way to help support your boy here in this channel. There's the link. I appreciate the love. Y'all be good, guys. I'll see you guys later. Check out Chart Prime as well. I am using Chart Prime a ton with my trading. Again, if you kind of see this here too, you can kind of see how like often I use them, man. I really do use them a ton. I really do use Chart Prime like a bunch. And again, if you look at like the history of this, you can kind of see why. They do really good at like calling the top. Look at the sell signal drop, reversal up bounce, reversal down drop, sell signal drop, possible reversal up buy signal bounce. Again, I keep going back. I can't guarantee you're going to make money. Nobody can. Check out the link in the description if you want to check that out as well. I'll see you guys later. Y'all have a safe weekend. I'm going to get out of here and go rest a little bit, guys. So y'all be good. Again, top 3 greatest trader of all time signing off. Have a great weekend.